Okay, if everybody would find their chair, and it's a little past the time we begin, but that's all right. We're close. We'll get started. I see we have some special guests here today. Laurie, you want to introduce your special guests? Who are these people?
Future senators.
Yes, future governor and president. Satan and Gabriel.
Gabriel and Satan, welcome. Okay, first off on the agenda, we're going to be talking about fees and volume-based excise taxes, and to present this, we're going to start out with co-chairman making a few remarks of how this came on the radar of our revenue committee, and then staff Dean Tempty will present the concept. So, Mr. Co-chair.
Yeah, just briefly, committee. When we were down, I think it was the 19th of April, we were at the management council meeting. They were selecting topics for us. And as I said yesterday, that they added a number of topics. This is one of the topics, and we're calling it indexing. And it is conveniently positioned with our top priority. That's where they put it. And you can find that when you look at our topics in our website. But anyway, they said, we want you to look at indexing that deal with volume-based taxes and for fees, because we have, just like everybody else, those things never change, and prices change, inflation occurs, and all of a sudden that, we have to make a big jump. And we had to do that in 2013 with the fuel tax, because we hadn't done anything with it since 2002, if I remember right. And it happened to be that I was the one that had to lead that discussion and that argument. And it did take 2 years off my life expectancy. And I would have lived to 86, but this way I'm going to live to 84, according to the life tables. But anyway, they wanted us to do indexing, but not indexing for every fee and every volume-based tax, but just the ones that contribute the most to revenue. So what I did is I had Mr. Tempty, who was here, and Mr. Richards look through all of the volume-based taxes and fees, licenses and so forth, and come up, I just wanted to, apply the Pareto principle. And I wanted to look for the 20% of the fees and taxes that would contribute 80% of the revenue. And according to these guys, they did even better than that. It's more like 90% of the revenue with 20%. So they'll talk about that now. And what I want to have happen today is, if there's some interest in carrying this idea forward, we don't have to decide what industries or which taxes or which fees are going to be included in this, but just the methodology and whether we should have LSO prepare a kind of a format of a bill to include these that we decide to include. But that's going to be later on today, and Mr. Tempty will give this research report to us, and then we can talk more about it. We have a lot of people from departments that are here to talk about how they look at it, and that might have some influence on us too. So that's basically all it is. The only thing I was going to say, I heard from a constituent back in Johnson County that said that this live streaming is fantastic. I mean, it's very professional, and it really looks like it's doing well. She didn't say so much about the cast, but she thought that the production was very well. Okay.
Thank you, Mr. Co-Chair. That's a good intro to this particular subject. And so we'll turn the time over to you, Dean, and talk about what we found out with staff here and on this subject, and give us a an overview and kick this thing off. So time is yours, Dean.
Thank you, Mr. Chairman, members of the Revenue Committee. My name is Dean Temte. I work in the Budget Fiscal section of LSO. And as the chairman both described, I will be talking about the concept of indexing the possibility of Wyoming indexing certain taxes and fees. Really, just to start off this conversation, and I'm on slide 2 right now of the presentation. The presentation is not up on the screen. It, however, is. You do have a copy in front of you. Received a paper copy in your packet. This presentation is also can be found on the LSO website for folks who want to follow along who are in the audience. But the first thing I wanted to do is kind of set up some indexing terms. And basically, Mr. Chairman, as you indicated, when you're talking about indexing, you're talking about the concept of inflation. And inflation has been defined as a process of continuously rising prices or equivalently of a continuously falling value of money. And that is a definition provided by I found on the Bureau of Labor and Statistics website, which is the main federal agency with the responsibility of tracking things like inflation. Now, when you're talking about a price index is a tool that simplifies the measurement of price movements in a numerical series. Probably everyone in the audience has heard of one of the products put out by the Bureau of Labor and Statistics known as the Consumer Price Index. Now, the Consumer Price Index program produces monthly data on changes in the prices paid by urban consumers for a representative basket of goods and services. And this particular index is typically referred to as the CPI-U. According to the Bureau of Labor and Statistics, this particular index is tracking the cost of those basket of goods, which covers 93% of the population of our country, tracking prices in the urban markets. Another particular index which the Bureau of Labor and Statistics puts out is called the Producer Price Index, which is a family of indexes that measures changes in the selling prices received by domestic producers of goods and services. Now, actually, this index was created and started back in 1902. So this is an index which has gone on for a long time. And actually, the name of this particular index, it used to be called the Wholesale Price Index. The name of that index was changed in 1978. However, the Bureau of Labor and Statistics indicated they did not change the methodology. They just changed what it was called. Another index which we find is there's an index called the Wyoming Cost of Living Index. And this index measures the year-over-year inflation and compares each county's cost of living in one period, but not over time, to the statewide average. And this particular, the Wyoming Cost of Living Index, or WCLI, is actually published by the Wyoming Department of Administration and Information, the Division of Economic Analysis, and which Dr. Winland Liu was here yesterday. He is in the Division of Economic Analysis, and he's here this morning. Good morning, Dr. Liu. So there are a variety of indexes which attempt to track the course of inflation that are possibilities that could be utilized to adjust flat or volume-based taxes should the committee decide to go in that direction. And basically, as far as to try to come up with a definition of indexing is basically the adjustment of a flat or volume-based tax or fee based on a selected index in order to keep pace with inflation. Mr. Chairman, I didn't have to work for the legislature for very long before I heard the phrase inflation proofing. Now, inflation proofing is something, it's a phrase that is used or an endeavor by the legislature to protect the state's permanent funds. Inflation proofing is typically discussed when you're trying to talk about protecting the value of the corpus of the Permanent Wyoming Mineral Trust Fund. It's also discussed when trying to talk about the Common School Permanent Land Fund to protect the value of our permanent funds. So really you could think of indexing as a way of attempting to inflation proof our revenue streams. Now on to slide 3 in the presentation. I just put down a list of the annual inflation rates since the turn of the century for 2 different indexes, the Consumer Price Index for urban consumers in the left column and the Wyoming Cost of Living Index in the right column since calendar year 2000. And actually these particular figures come from a table which can be found on the Economic Analysis Division website. And it includes not only annual inflation rates, but the calculation of cumulative inflation from the year 2000 to the year 2017. You'll notice the Consumer Price Index, the highest value in that particular series over that period of time was the annual inflation rate for calculated by the Consumer Price Index was 4.1% in 2007, which was followed by the low number in the series of 2008 of just 0.1%. And you will remember what was happening in our country about at that particular time. If you recall, I think it was approximately September 2008, the near collapse of our financial markets, and we had pretty serious times financially in our country at that time. The column to the right, the WCLI, patterned similarly. The high inflation rate in that series was 6.1% in 2007, and actually the low in that series was 0.5% in 2015. And again, these numbers came directly from a table on the Economic Analysis Division website. The cumulative inflation, I calculated those based on that table. On to slide number 4. When Mr. Chairman asked me to look into indexing and try to set up the conversation for today, when he requested that, I went ahead and contacted a couple different agencies. One of them was the National Council of State Legislatures, or NCSL. I also contacted the Tax Foundation. And both of those organizations have looked at the concept of indexing in the past. And in particular, I was able to find out that probably the volume-based tax, which has been indexed most prevalently, typically in our country, has been the fuel taxes. And as a matter of fact, I found that there were actually fuel taxes have been adjusted by indexing in 10 other states. And those states are listed on, those 10 states are listed on slide 4. Either states that have either have been indexing their fuel tax rates or will begin indexing their fuel tax rates in the near future. And those states are California, Florida, Georgia, Indiana, Maryland, Michigan, Nevada, North Carolina, Rhode Island, and Utah. A couple of these I'll pick out. Actually, as far as the fuel tax in Nevada, the state fuel tax is not indexed. However, counties have the opportunity to vote and vote in an index for their county fuel taxes, and they may be adjusted annually based on a producer price index for highways and streets. There's also one of our neighboring states, Utah. Actually, their fuel tax is based on a defined taxable price. However, that taxable price is adjusted based on the consumer price index. And I took this information. NCSL have done a couple of articles in regard to fuel taxes and variable rate gas taxes. A lot of the finding those particular states that do that, I found those in those particular information sources. Going on to slide 5, NCSL was actually very helpful in this particular, helping me prepare for this presentation. I contacted them shortly after this request came to us, and actually NCSL prepared a nice document specifically for us to identify other taxes and fees which are adjusted by indexing in other states. And according to that document, there are 12 other states who adjust not only fuel taxes, but other flat or volume-based taxes by some sort of index, typically either a consumer price index or a producer price index. I think one of them was an example actually computed based on a GNP figure, if I remember right. Wisconsin, they actually adjust their tax brackets for metallic minerals, is adjusted annually based on the change in the GNP deflator computed by the Bureau of Economic Analysis. Few examples close to home. Colorado has a severance tax rate on their coal that the base rate is 36 cents per ton, but that one is adjusted quarterly based on the producer price index for all commodities. And that one has been, that index has been in place for some time. That base rate is 36 cents a ton, but based on the inflation since that base rate was set, that current rate is currently 82.4 cents per ton. So there are some examples close to home. I already mentioned the state of Utah, how their fuel tax, their base rate is adjusted by the consumer price index. One of the interesting taxes, and this includes not only taxes but also fees as well. One of the interesting fees that merits more discussion is in Texas. It's called the Texas Special Cigarette Fee. Now, this is not the Texas cigarette tax. It's something completely different. Actually, Texas has a cigarette tax set at $1.41 per pack, and it is not indexed. As a matter of fact, I did not find one cigarette tax in our country that is currently indexed. However, this Texas Special Cigarette Fee, what this is a fee paid by cigarette manufacturers who are not part of the Tobacco Master Settlement Agreement. Now, the Tobacco Master Settlement Agreement actually the big one consists of 46 states, and actually Texas is not one of them. Texas went ahead and went head-to-head with Big Tobacco all by themselves and came up with their own settlement agreement with the tobacco, with the big tobacco companies in their own settlement agreement. However, Texas then did not want to leave out the cigarette manufacturers that are not part of the Master Settlement Agreement and created a special cigarette fee for just those manufacturers that are not part of the settlement agreement, and that particular fee is 55 cents a pack, and actually it is adjusted by either the greater of 3% or the increase in the consumer price index. And as a matter of fact, this particular Texas Special Cigarette Fee, it actually got challenged. small tobacco, the other tobacco manufacturers not included in the master settlement say, hey, you're picking on us here a little bit. This is kind of, you're subjecting us to not only the $1.41, but another 55 cents. So we're feeling a little picked on, a little slighted, because it only applies to us and not the tobacco producers in the master settlement agreement. And the Texas Supreme Court said, we don't agree. So we will have you pay an additional 55 cents and have that amount adjusted either by 3% or the consumer price index. So anyway, that's kind of a little bit more of the story about that particular one. Again, I did not find a cigarette tax in a state that is indexed at this current time, but Texas does index their Texas special cigarette fee. And you can look through the list. One of our close neighbors, a neighbor that I discussed last year when we tried to compare tax structures, was North Dakota. Their gas production tax base rate is adjusted by the producer price index for gas fuels. You can also see there's a variety of fees as well, which are subject, that are adjusted by indexes in particular states. If you look at the state of Missouri, the solid waste sanitary landfill fee is adjusted annually based on the change in the consumer price index. So again, the summary from these two slides is there's basically 12 other states who are adjusting either a flat-based tax or a fee based on some sort of index. And as Chairman Madden described, he asked us to look at what particular taxes or volume-based fees do we have in Wyoming, which may be a candidate for indexing. And we tried to do that, which brings us to slide 7. Now on slide 7, you will see we have revenues which typically are utilized by the Wyoming Department of Transportation. Their state motor vehicle registration fees. And as Chairman Madden mentioned, these were adjusted pretty recently, as a matter of fact, during the 2017 session. And as well as you see the driver's license fees as well, those were also adjusted during the 2017 session. If I recall correctly, though, it came out that actually the driver's license fee had been the same since the mid-1970s before they were adjusted again in the 2017 session. You'll also see a couple of the big categories here as well, the diesel fuel tax and the gasoline fuel tax. Those are certainly the biggest dollar amounts on slide number 7. And these are actually FY17 collections. And these are actually collections of the entire 24-cent diesel fuel and gasoline fuel revenue stream. Diesel fuel tax amounted to $82.9 million. And this was just based on the flat 24-cent diesel fuel tax in place. And actually, this slide here, it says of this, $57.4 million is deposited to the highway fund. Now that $57.4 million figure, that is the portion, that is the part of the 23 cents of the 24-cent fuel tax, which is distributed to the highway fund. I believe 75% of that 23 cents is distributed to the highway fund. But actually, if you include the 1 cent lust penny, if you will, which has been in place since, I believe it's 1989, if you include that amount, the total deposited to the highway fund is $64.1 million, which accounts for roughly 77.3% of the total, which goes to the highway fund, which of course they utilize that to help maintain and build our roads. Kind of the same story with our gasoline fuel tax. This total gasoline fuel tax in fiscal year 2017 was $78.5 million. And this slide has of this $40.8 million. And actually that number's in error also. It does not include the lust tax. If you include the lust tax portion of the gasoline fuel tax, $46.8 million is actually directed to the highway fund, that amounts to 59.6% of the total gasoline tax. So those are probably the biggest taxes on this. They are the biggest taxes as far as dollar amount. They're based on a flat amount. You will also see we have game and fish revenues here as well. The hunting license fees, the fishing license fees, the conservation stamps revenue, and other licenses. And you will also recall that these were recently adjusted in the 2017 session as well, where many of the hunting and fishing license fees were increased. However, similar to the driver's license fee, which hasn't been adjusted for a while, the conservation stamp amount is $12.50 per conservation stamp, but that particular rate has been in place since 2008. So, and that was 10 years ago. If you go on, we tried to identify other general fund revenues as well. And what we found is this: there are 181 categories of other general fund revenues. However, as Chairman Madden described, the Pareto principle really applies here, because actually 94% of the total other general fund revenues are contributed by just 25 of 25 different categories that amount to $1 million or more. And on this particular page also, I provided an indicator whether it was a possible indexing candidate or not. As you can see from this slide, we did indicate that we did think that basically all of the categories of YDOT revenues listed here and all of the categories of the game and fish revenues listed here could be potential candidates for indexing. However, there were several of the large general fund revenues that probably aren't a candidate for indexing. Probably looking at the first one, the biggest one, federal mineral royalties, which is $62,142,500. Now, FY17 was kind of an anomaly as far as the federal mineral royalties distributed to the general fund. This amount is usually $2 million a year, and that $2 million is generated by a 1% administrative fee, which goes to the general fund for all federal mineral royalties distributed under the $200 million cap. However, you will recall from the 2016 session, the federal mineral royalties and severance taxes, which are usually distributed to the highway fund, were actually diverted to the general fund. And in exchange for those that general fund diversion, you'll see in a subsequent slide that YDOT instead received AML funds to replace those general funds, if you will. So as far as this list, that the federal mineral royalties is something that probably is not it definitely is not a candidate for indexing. For one thing, that amount is determined by federal statute, not state statute. There's not much we could do about that. The next category, the next largest category in this list, is an item called cost allocation. Now, cost allocation is the reimbursement to the general fund for indirect costs incurred from the use of federal or other funds. It's basically a charge to non-generally funded agencies or divisions within agencies to help cover the cost of services provided to those agencies by general fund agencies. And actually, the general fund is reimbursed for those costs. However, again, that would not be a candidate for indexing. It's just the cost allocation amount, it is what it is. It's really not subject to an index. The next largest item on this list, quarterly insurance premium tax. Now, what this particular category is, the tax rate on quarterly insurance premiums is actually 0.75% on premium income. And we indicated that this category would not be a good candidate for indexing for a couple reasons, because this particular general fund revenue source, you could make the argument that this one is already subject to has an inflationary component to it, because it is actually based on insurance premiums. And as we all know, insurance premiums tend to go up over time. And another reason why this category would not be a good one is because it's the fact that Wyoming is what's known as a retaliatory state. There are over 1,100 licensed insurance carriers in the state of Wyoming. However, there are only 4 of them that are domiciled in Wyoming. So this Wyoming being a retaliatory state means for most of the 1,100 insurance companies who have to pay the insurance premium tax, it's described in Wyoming statute that they pay the higher of the tax that they would pay to us based on our rate, the 0.75%, or the rate in their home state, which is typically much higher. So they pay the higher of their home state rate, or our 0.75. So attempting to index this 0.75% rate quite possibly wouldn't generate any additional revenue for the state of Wyoming. So those 2 reasons probably make that one not as much of a category for indexing. The next largest general fund item, this revenue committee actually talked about this particular revenue item during last session. This is the profit component for liquor sales. And the profit margin for liquor sales is actually set in statute in Title 12 at 17.6% above the cost of merchandise. And this particular rate has been in place since 1996. Revenue Committee sponsored a bill in 2018, House Bill 44, to increase this rate from 17.6% to 20.6%, but this bill failed introduction.
Hold on just a minute, and we've got a question. Mr. Co-Chair.
Yeah, I just need to understand this on the liquor sales profit. That really doesn't need to be indexed because liquor is based on a % markup, right? So,
Mr. Chairman Madden, you are exactly right. Since this particular profit amount is based on the cost of liquor, which
right.
does
So,
go up over time, there's already inflation component built into this particular revenue source. So for that reason, we indicated that this would not be a good candidate or need to be indexed, if you will, because there's already an inflationary component part of this calculation.
it's just not volume based. It's
That is correct, Mr. Chairman. This is not the profit component here is not volume based. It's actually based on the cost of the liquor purchased by the Wyoming Liquor Division. And Mr. Chairman, Senator Case, I'm kind of glad you brought this up. Actually, I'll get to that one just a little bit later.
That's good. Oh, Representative Conley.
Thanks, Mr. Chairman. Dean, I understand what you're saying about liquor and that it already has an index component because of the wholesale cost, but couldn't we consider the markup that we have as indexable in the same way as these other components here? That we move from that 17% to whatever the inflation rate is in a particular year, and it would make it the same as all of these other elements that you have here.
Dean?
Mr. Chairman, Representative Connolly, you will notice further down in the list is actually the liquor taxes, the volume-based taxes for spirits and wines. I would suggest to you that perhaps if you wanted to try to do that, that may be a better one to try to index. It is actually based on a volume. Since this one is based on a percentage, this is not the kind of index you can set it and forget it, if you will, because if you apply an index to 17.6% and leave it for 50 years, that percentage is going to get pretty high over the course of time. And that's one thing that the slides coming after this slide will show, that while indexing increases small amounts each year, if you're looking at a span of 20, 30, 40, 50 years, it adds up. So I guess my suggestion would be, if you wanted to try to index the 17.6% amount, you would probably have to set a limit or do it over a specific period of time and come revisit it rather than just leave it in perpetuity.
Right. Representative Obermuller.
Yeah, thank you, Mr. Chairman. Just clarification on indexing. Isn't the purpose of, one of the purposes of indexing is to make it similar to the percentage-based calculations? It's evening the playing field, because the percentage-based calculations that is the inflation proofing, because you assume that the underlying item is going up, so the collections increase as long as the percentage stays. That's how the severance tax percentage works. So, but when you get into the fees with a fixed fee, then they sit there and they don't move forever. And so the idea of indexing is to make it comparable in some way to the percentage-based calculation.
Dean?
Mr. Chairman, Representative Obermuller, I agree with what you said there. However, one thing I think in regard to this 17.6% is actually applied to the wholesale prices of liquor, which I think you could argue also have an inflationary component. The wholesale cost of liquor has probably gone up over the years. It hasn't stayed at a flat amount. So you could say that amount is already going up due to inflation, and to try to index the 17.6%, I think you would be introducing a second component of the calculation, which was subject to inflation as well.
Okay. We can go on. We interrupted you when you were talking about the cigarette tax, so continue on.
Okay. Mr. Chairman, the next category in the list actually is the cigarette tax, and this was the first category in the list of other general fund revenues, which we feel could be a possible candidate for indexing. The total tax rate currently on cigarettes in the state of Wyoming is 3 cents per cigarette, or 60 cents per pack. And this the 60 cent per pack rate has been in place since 2003. As you recall, the Revenue Committee sponsored in 2018, House Bill 43, to attempt to increase the cigarette tax from 60 cents a pack to $1.60 per pack. But that bill was not considered for introduction. Another wrinkle to that particular House bill as well, that tax increase was going to be contingent upon the state of Wyoming being able to reach agreement with the tribes. And I believe that discussion in regard to that is coming later this morning as well. The next category, general fund category, it's called corporation tax domestic, and this amounted to almost $8 million in FY17. And you will notice on our indicator whether it's a candidate for indexing. The indicator indicates yes, but a flat amount only. The annual license tax on Wyoming corporations and foreign corporations is actually the greater of $50 or 0.2 mils. Now a mil is 1/10 of a cent, so 0.2 mils would be 2/100ths of a cent on the sum of capital, property, and assets reported by those companies. So as far as our analysis of this particular tax, this is kind of a hybrid, if you will. There's a part of it's a flat tax. That $50 tax rate has been in place since the year 2000. But it also has a component that can increase over time as the value of capital and assets, as those amounts can increase or inflate over time. So as far as that one goes, I would say the $50 rate would be a candidate for indexing if the committee wanted to go in that direction.
Yes, Representative Obermuller.
Thank you, Mr. Chairman. This item is sort of the poster child for what we're talking about because of the two components. So when you compare the two types of companies that are involved here, if you're a capital-intensive company with a lot of assets, you are indexed to inflation. You're inflation-proof because of the 0.0002, right?
Mr. Chairman, Representative Obermuller, I agree with that.
And if you are a non-capital-intensive corporation and you're paying the $50, that number hasn't changed since year 2000. So there's an inequity in the way corporations are treated without having the indexing of the $50 component for the non-capital-intensive companies. Would you agree with that?
Mr. Chairman, Representative Obermuller, I would agree that the $50 is just $50. If for someone below the threshold of the, so that the 0.2 mils applies, that fee is just going to, it's $50 and isn't going to go up from there.
Okay, go ahead and continue on.
Okay. Mr. Chairman, the next general fund revenue source in the list is license fees for non-resident insurance agents licensed in Wyoming, and that fee schedule is established in Title 26, Chapter 4, and those have various fee rates. However, those fees stay at a flat amount, so that particular revenue source could be a candidate for indexing. Mr. Chairman, the next revenue source on the list, rental of non-state-owned buildings, state agency lease reimbursement. And Mr. Chairman, this is basically the revenue that is reimbursed to the state or to the general fund for lease rental costs incurred for agencies with federal or other funds. So this one is actually very similar to cost allocation, where the number is what the number is and really not subject to an index. Now, the next category, other tobacco products. Now, on this particular one, I indicated that this was not a candidate for indexing, but I have to admit I kind of changed my mind a little bit. For other tobacco products, we actually have a couple things going on. There are a few things being taxed here. There is a tax of 20% of the wholesale price or a 10% of the retail price on cigars, snuff, and other tobacco products. Now, I would contend that since these particular taxes are based on the wholesale price and the retail price, that you could say that these particular revenue sources have an inflation component to them already, and that to try to index these would introduce another inflation component to this tax. However, also included in this category is the tax on moist snuff of 60 cents per ounce. Now, this is a flatter volume-based tax, which has been in place since 2009, and this 60 cent per ounce rate on moist snuff actually could be indexed. And actually what I found out, I talked to Kim Lovett of the Department of Revenue, who is here in the audience today, and she mentioned to me that actually a pretty large percentage of this $5.4 million of the other tobacco comes from the tax on moist snuff, approaching like 88% of the total. So the tax on moist snuff could be a candidate for indexing if the committee decides to go in that direction. The next category in the list is certificate of appointment fees for insurance companies. And now this is a $15 fee paid by insurance agents for the appointment or termination of appointment as insurance agents in Wyoming. And actually this $15 fee has been in place since the year 2000. This one, it could be a potential candidate for indexing. The total amount that came in fiscal year 17 was almost $4.9 million. The next category, sales tax, and what this is the 1% administration fee on sales tax, which is it is deducted from the distribution to local governments. The way that distribution works on the 4% sales tax anyway, the state gets their share of 69%, and then the statute says of the remaining share, which is the 31%, we deduct 1% for administration. That's why the state ends up getting a little bit more than 69% of the 4%, and the local governments end up getting a little bit less than 31% of the 4%. And this 1% administrative fee actually also applies to the local pennies added at the local level as well. So the local governments on the additional pennies added, they end up getting 99% rather than 100% of those amounts. And Mr. Chairman, I indicated a no on this particular category just because since sales tax is actually based on the value of products, and those products have an inflationary component, the argument could be made that this particular revenue source already has an inflationary component to it. The next category, limited liability domestic. This particular category represents all the other fees that may be paid by limited liability companies, including their organization or correction of filings, dissolution, reinstatement. There's just a variety of fees, and there are various fee rates having to do with those. These particular fees, those could be a candidate for indexing. And I'll try to head through the rest of this list rather expeditiously. let's see.
I think to help you out, Dean, we could probably take the no's.
Okay,
Are there any committee members to look at those, the no list that Dean has listed here on our, that we're looking at? And if you disagree with that, and maybe just cover the yeses.
okay. Yes, Mr. Chairman.
If there are no other objections to that, the no's, anybody got a question on the no's list? The rest of them? Representative Conley, which one?
Is that something that's a dollar fixed certain right now, and that it's,
Uh,
and if so, what is it?
Mr. Chairman, Representative Connolly, I believe that particular penalty is a percentage of the tax due, and the tax due is a function of the value, which is based on the market value. So you could argue that that one already has an inflationary component to it.
Yeah.
Mr. Chairman, Representative Connolly, I would agree with that. Either there is already an inflationary component to it, or kind of out of our realm of control, if you will, a function of federal statute in some cases, such as the per diem received by the Department of Veterans Affairs.
So that leaves us with the 4 yeses left remaining, starting with the securities agent registration fees.
Correct. And this particular fee is registration fee paid by securities agents under Wyoming Statute 17-4-410B. This one was actually increased from $35 to $45 in 2016, but since it is a flat amount, it could be a candidate for indexing. The next yes on the list is the wind energy tax, which is $1 per megawatt hour produced from wind resources. And this particular rate has been in place since 2011. Since this is a flat dollar amount per megawatt hour, in theory, this one could be indexed if the committee chose to go in that direction. The liquor tax.
Continue on, Dean.
Thank you, Mr. Chairman. The next category that I think is could be a potential, and I have to admit, Mr. Chairman, this is one where I kind of changed my mind on this one too, possibly. This is the flat amount. These are the flat taxes on wine and on spirits. For wine, it's 28 cents a gallon on wine, and for spirits, it's 94 cents a gallon. Now, these are certainly flat amounts, but also related to this tax is the 17.6% profit margin, which I talked about above. So the argument could be made that this particular revenue stream could be looked at as already having an indexing component to it. However, now one thing, liquor tax, this one does not include the beer tax. The beer tax actually does not bring in $1 million a year. It only brings in about $250,000 a year. And as we've discussed in the past, the tax rate on beer is 2 cents per gallon. And that 2 cents per gallon rate has been in place since 1935. And just for fun, I figured out what that tax rate would be if it would have been indexed since 1935. And that tax rate would be 35 cents a gallon now if it would have been indexed since 1935. And if it would have been indexed, if that 35-cent rate would have been in place in 2017, the revenue would have been $4.1 million instead of $250,000.
Isn't that nice?
Mr. Chairman, I have to admit that's kind of an example of what a fiscal analyst does for fun when they're at work.
That's it? That's your fun? Okay.
Yes, Mr. Chairman, it is kind of sad, but it's the truth. Mr. Chairman, the last one on the list here that is a potential candidate for indexing are the circuit court criminal fees. And actually, until November 1st, 2017, there was a $20 fee for every criminal or traffic charge or count for which a conviction results. And effective November 1st, 2017, that $20 fee is for every criminal traffic case for which a conviction results. Now, one unique thing about this particular fee is that actually these fees are not set in statute, but they're established by rules for the fees and costs of the circuit courts. Now, in discussion with Budget Fiscal Administrator Don Richards, I asked him, I said, could this be indexed? And his indicator was, well, we could probably figure out a way to do it if the committee wanted to do it. Although that one is currently not in statute, it's just established in rule.
I'll bring up your point. Senator Case?
Well, if we raise these fees, Mr. Chairman, we're going to put criminals out of business. Not business friendly.
All right, continue on.
Okay. Mr. Chairman, I'm done with slide 7 now. That one took a while. Now I'm on slide 8, and all I'm trying to do is show on slide 8 is what the estimated impact would have been on FY17 revenues if the categories with a yes on the previous page would have been indexed, and the additional FY17 revenue, which would have been raised if that were the case, and what those rates might look like if they were indexed. And what I did is I indexed for inflation from July 2013, and actually I have a typo on this slide. My apologies, Mr. Chairman. It's actually indexed for inflation from July 2013 to July 2016. Recall that the fiscal year 2017 actually begins in July 2016, and that cumulative inflation rate from those two dates is roughly 3%. And you will see the revenue sources that would have gleaned the most if that amount would have been indexed are the diesel fuel tax and the gasoline fuel tax. Now, you'll see state motor vehicle registration fee on here as well, and as we discussed, many of these got increased during the 2017 session, effective beginning for fiscal year 2018. However, this was just kind of a slide trying to show potential, trying to put a dollar amount to the potential of indexing, and I chose to index from July 2013 just because that was the date of the effective date of the last fuel tax increase we experienced when it went from 14 cents per gallon to 24 cents per gallon.
Okay. All right, continue on.
Mr. Chairman, next slide, slide number 9. I tried to take a closer look at the hypothetical, what would have happened if fuel tax rates would have been indexed since the last time they were increased in fiscal year 2013. You will see the left side of this slide are all of the fuel taxes that went to the highway fund, to local governments, to the highway fund for the lust penny, and the total, and then also the particular consumer price indexes in July for each particular year from 2013 to 2018. The column next to that shows the cumulative inflation rate from that increase to each one of those particular years. You will see the cumulative inflation rate from 2013 and actually I calculated the last one to actually the last index we have, which is the index for April 2018, just to give the committee an idea. and that cumulative inflation rate, which could, if this would have happened, the indexed tax rate could have been increased from 24 cents per gallon to 25.74 cents per gallon over this short time frame. Now, what this does, though, it also shows the dollar impact of what that potential indexing could have meant. That could have resulted in an additional $19.3 million to the highway fund, an additional $9,650,000 to local governments, an additional $1,970,000 to the highway fund for the Lust penny, and those totals up to $30.9 million. Mr. Chairman,
Okay, go ahead.
the next slide, slide 10, actually this is a slide that I did not create. This is a slide which was created by the Wyoming Department of Transportation. And actually the Wyoming Department of Transportation initially sent this slide to the Joint Appropriations Committee in response to questions from the Joint Appropriations Committee about indexing, which took place last January. As I mentioned here, this slide was prepared by the Department of Transportation, and the calculations, I did not verify these calculations, but it really does show the impact of what indexing can do over time. The Department of Transportation estimates that if fuel taxes were indexed from 1999 to 2017, additional revenue to WYDOT would have been over $400 million. And that is definitely a significant dollar amount. Going on to slide 11, that particular dollar amount is especially significant when you look at slide 11 is a summary of all the dollars appropriated by the Wyoming Legislature to the Department of Transportation for highway transportation projects since fiscal year 2006 all the way through fiscal years 2018. As you can see, when the state was enjoying its surpluses, the state was appropriating in the dollar amount of $175 to $200 million to WYDOT per biennium. Now these dollar amounts have decreased over time. However, one particular thing I want to point out in regard to this is the particular decline. You will notice in the 13-14 biennium, there was a total of roughly $100 million allocated by the legislature for road construction projects, but that amount basically was cut in half or less in the 15-16 biennium. And I did research this, Mr. Chairman. Actually, in Governor Mead's budget message, he indicated that at that particular point in time, there was a standard budget amount for highway construction of $50 million, and the Department of Transportation submitted an exception request for an additional $50 million. However, at that particular point in time, Governor Mead said, I am denying this particular request. And the reason he denied it is because of the new fuel tax that was passed during the 2013 session, which basically made up about $50 million. And Governor Mead mentioned, thanks to that fuel tax, this $50 million is now available for other needs, other expenditure needs, or savings if the legislature wants to do that. The final lines on this slide as well, these also discuss, you'll see in the 17-18 biennium how I discussed WYDOT was allocated a large amount of AML funds for highway construction, $162.3 million. However, because of that AML allocation for that those funds for highway projects, the legislature diverted severance taxes and federal mineral royalties from the highway fund to the general fund. And that diversion was taking place in both fiscal year 17 and 18.
Oh, we got a question. Mr. Co-Chairman.
Just briefly, Mr. Tempty, that 658 that you see there is the sum that that results from the subtraction of 120 million? Or does that not, I would argue that should not be in that sum because that was just a swap of money that didn't have a net effect on our budget.
Mr. Chairman, Chairman Madden, actually, if you take the last three lines altogether, the AML funding of $162.3 million and subtract the $13,423,000 of severance taxes and $120,285,000 of FMRs, you reach a net amount of $28,592,000. And the net of those three, that $28,592,000, is included in that $658 million total.
Good. Okay,
Okay.
no questions, continue on.
Mr. Chairman, on slide 12, I actually did a similar analysis as I did for gasoline taxes from the last increase in 2013. I did the same thing for cigarette taxes, which was last increased on July 1, 2003. The cigarette tax rate was 12 cents per pack in fiscal year 2003, and beginning in fiscal year 2004, it went up to 60 cents a pack. And this particular slide just shows if that 60 cents per pack would have been indexed from that period of time, the tax per pack that would be in place, that could have been in place beginning in fiscal year 2019 would be 81.74 cents rather than the 60 cents. And this slide also shows the inflation adjusted amount, which could have been distributed to the general fund or to local governments in the event that that amount would have been indexed since the last increase.
Okay, continue.
Mr. Chairman, going on to slide 13, I basically did the same thing again, however, in talking about the Wyoming license tax collections. Now, and you will notice these dollar amounts for the $50 license tax. These represent, these are smaller than the total, which was on the slide with all the numbers on it, because these amounts are just paid by those domestic and foreign corporations and limited liability companies that pay the flat $50 amount. And I got, this information was included in a memo prepared by the Secretary of State's office last November. But for just those particular entities that pay at the $50 amount, and again, like I mentioned, this $50 amount has been in place since fiscal year, actually since the year 2000, which is when it was increased from $25 to $50. And this slide just shows if that $50 amount would have been indexed since the last time it was raised in 2000. Actually, that flat amount would be $72.50 now. And that would have resulted in roughly 8.77 additional $1 million had that particular rate been indexed since the last time it was increased.
We got a question. Representative Obermuller.
Thank you, Mr. Chairman. Just to follow up on that number, if you take that number from its inception in 1977 and index it from there, the number is a little over $100 right now. Just FYI.
Mr. Chairman, Representative Overmuller, thank you for that information. And that does not surprise me. The consumer price index I've been using, as I mentioned in one of the beginning slides, an index basically starts at a base year or base period of time. And that index, the base period of time was from 1982 to 1984. Basically when they're saying when a dollar was still worth a dollar. And what you're saying back from the 70s, that was even before that period of time. So that piece of information does not surprise me after looking at indexing for these past few weeks.
No further questions. All right. Let's summarize.
Okay. Mr. Chairman, and I don't want to beat a dead horse more than I have, but this slide just kind of summarizes my presentation. Indexing is the adjustment of flat or volume-based tax or fees based on a selected index so that revenue stream can keep pace with inflation. Shows why inflation we haven't been in periods of high inflation since the turn of the century. It does add up over time. There are several indexes which are candidates which could be used by the legislature to adjust flat rate taxes or fees, the Consumer Price Index, the Producer Price Index, or the Wyoming Cost of Living Index. Indexing has been used by other states. The particular kind of tax which has been most frequently indexed is the fuel tax. However, there are other taxes and fees which have been indexed and are indexed. And we identified potential 18 different major taxes and fees of over $1 million that are potentially candidates for indexing. And just to summarize it, indexing flat or volume-based taxes and fees would provide for gradual increases in taxes and fee rates to counteract inflation impacts to these revenue streams. And Mr. Chairman, the final slide number 15, this is just a slide for things, a short list of things for the committee to consider in regard to this topic.
Okay. Thank you, Dean. Well done. Good work, and we appreciate the efforts there. This is good information to have. Questions from the committee for Dean? Representative Connolly.
Sure. Dean, you've given us some choices about kind of which index to use, and I'm curious if any entity in the state uses the Wyoming Cost of Living Index only. And I know we talked about it on school finance recalibration. There was a lot of debate about it. But does any entity use the WCLI?
Mr. Chairman, Representative Connolly, as a matter of fact, I did find, I believe it was 3 examples where the WCLI is used. And I'm kind of going by memory here. I can't find the particular note that I created for myself for that, but you are correct. Probably the one that comes up the most in conversation is how the WCLI is adjusted to adjust regional costs in regard to the school funding formula. That is a big thing that the WCLI is used for. It's also my recollection, I believe it was used for the property tax refund program to adjust certain components of that particular calculation. So there are instances, I did find 3 instances where the WCLI is used currently in Wyoming statute, and actually 3 examples of how the Consumer Price Index is used in statute. The utilization of the Consumer Price Index, that, if I remember right, that was in having to do with workers' compensation. The Consumer Price Index is applied to those calculations, and also to, I believe it was for social service things as well, as far as the qualification of aid that the state provides to folks. So there are examples in statute where both the Consumer Price Index and the WCLIR are already used in Wyoming statute.
Further questions for Dean before we excuse him? And Representative Furphy.
Thank you, Mr. Chairman. I just want to remind the committee, one thing that's a concern to those communities who are fairly contiguous to other states, like our community. As we're looking at any of these fees and increases, we need to be concerned that we remain competitive with these other states. So I just remind the committee of that. Thank you.
Okay, thank you. Further questions? Comments? Okay. Thank you, Dean. Great job. Appreciate that.
Thank you.
Turn some time. I see we have some departments here. We'll start with the Department of Revenue if they have any comments on this presentation. And then we have, I think, Game and Fish and YDOT and any other departments. And then we'll have some public testimony after our departments. So Revenue. Welcome back, Mr. Noble.
Morning, Mr. Chairman, members of the committee. I'm Dan Noble, Director of the Department of Revenue. I fully agree with the concerns you raised associated with indexing. I do want to, kind of in the interest of full disclosure, point out that some of the products that you were talking about, and I'll speak specifically associated with the ones that my agency deals with, may in some way have other components associated with them that do adjust with inflation. And I'll give you an classic example is the liquor itself. Not only is it subject to a volume-based tax, but it's also subject to a percentage of the tax as well. And one that people tend to forget is the fact that it's also subject to sales tax. Okay, so when you look at what at one point in my youth was a case of beer costing roughly $4.50, that's what all the people around me told me it was at that point. And now from personal knowledge, it's roughly $25 to $26 a case for the same beer. That's a 5-time increase as it relates to the sales tax associated with that as well. And in addition to the fact that when I was in my youth, there wasn't the local option taxes that there are today. So there are more taxes associated with this than just the volume-based taxes that may apply. A lot of the fees that you're talking about are based on a specific reason for having the tax in place. And I'm not going to try to get into whether that's something that should be increased as well or not. I mean, these dollars, regardless of whether they're index-based or not, are used for a specific purpose. And if they need to be indexed in order to keep pace so that those programs continue, that's certainly your prerogative. But I just want you to be aware of the fact that some of these, you need to recognize, do have some inflationary components. Cigarette taxes certainly are volume-based at this point, but they are also subject to sales tax as well. The same thing with moist snuff. It is, yes, 60 cents per ounce or equivalent, but they're also subject to sales tax as well. I do also remember in my youth that cigarettes were 1.35 cents a pack. That's what everybody around me told me. And then today, and not from personal experience, they're over $5 a pack now. And it's, it's something you got to recognize is that there are other taxes that apply to these things as well. And that is not to do anything other than provide full disclosure that we do have taxes associated with these types of products as well. The other fees that you're talking about there may or may not. Fuel tax is not subject to sales tax. So there is nothing but a volume-based component to that. And some of these other fees, the corporation fee has no other taxes associated with it, so you need to recognize that as well. And I'll certainly stand for any questions you may have.
I probably need to point out, Dan, though, when you refer to days of your youth, that was, time is everything in this. And that was a long
time ago.
Questions for Mr.
Point well
Noble?
taken.
Representative Conley, go ahead.
Yeah, thank you, Mr. Chairman. Dan, wouldn't it be fair to say, though, that your discussion regarding the sales taxes cuts both ways, and it goes along with Representative Furphy's comment about looking at contiguous states, that if you're going to think about the additional sales tax we have, then if you compare it to Colorado, which has more sales tax, in fact, we're looking at a lower level. So it does cut both ways when you're thinking about the comparison.
Mr. Chairman,
Noble?
Representative Connolly, that is correct. When you look at the overall tax burden associated with what other states may charge on these things, they may, and I don't really know whether they charge sales tax on cigarettes or not. I have no idea. And I know that they charge it on alcohol. But from what everyone tells me. Yes. But at any rate, I guess the thing is that remaining competitive with other states is obviously an important aspect of what we do as well. I certainly recognize that, but I just wanted folks to understand that when you look at the overall tax burden associated with a specific industry or product or something like that, recognize all of the components of it, because it's part of the equation, if you will.
Dan, how does the indexing affect the simplicity of calculations? I mean, businesses that collect the tax, as you see this thing change from year to year, as compared to, let's say, cigarettes at 60 cents for a decade and then, or more, how does that affect the cost of collecting taxes and these businesses that have to make those adjustments a little more ongoing than normal?
Mr. Chairman, I guess one of the things that I would point to, when you're talking about cigarettes in particular, is that one of the things we have to do is keep track of the fact that a specific tax rate is being charged on the cigarettes that are on the shelf. So we look to the cigarette stamp itself to determine whether the right rate has been charged on that cigarette. So we change the colors so it's easily recognizable that the right tax is being assessed on the cigarettes that are on the shelf. That is something, if it's indexed, we may have to look to, on a consistent basis, changing those colors, or recognizing the fact that as long as it's a Wyoming cigarette stamp on the product, we're going to consider the fact that when we sell it to the wholesaler, we're going to sell it at a higher price each and every year, and we'll just declare what that price is. If we're trying to monitor the fact that it is the appropriate tax being assessed on every cigarette that's on the shelf, different issue, much more complex, because we then have to alter those stamps every single year. I'm not so sure that if you're indexing it that you'd want to go down that path. I think you'd probably just start charging it as of July 1 of every year, or whatever year frequency you want to index it to, and just begin assessing the new tax on every cigarette stamp that is sold at that point.
I would guess that with the software that stores and marketers have, that it's fairly easy to make those adjustments.
Mr. Chairman, the majority of the product that's going to be offered and indexed on a volume basis is really charged at the wholesale level. So we in the liquor division would be charging those taxes before it is even sold at retail, those volume-based taxes. If you're looking at cigarettes, that's sold at wholesale as well. The stamping wholesalers are the ones that would actually, got you all choked up here, Mr. Chairman. So I don't know that the software would necessarily have to be adjusted at the wholesale level, with the exception of possibly malt beverages, because of the fact that we require reporting of them on a monthly basis to do that. But I think it's something we could handle fairly easily.
Further questions for the director? None. Thank you.
Thank you.
All right, we have other departments here. Game and Fish. We'll take you first, Scott.
Mr. Chairman, members of the committee, Scott Talbot, Director of Game and Fish, thank you for the opportunity to be here. Our primary purpose here today is simply to answer any questions that you may have, but listening to the testimony LSO, I might add a couple things for your consideration. Long-term, looking at license fees and the history of Game and Fish, they have tracked very, very closely to the Consumer Price Index, and that follows until the last license fee increase that was in 2008. Since that time, we have fallen below considerably with several license costs from the CPI. However, it was mentioned that last year there was a license fee increase granted to the Game and Fish, and I would just remind you that that was to offset almost $11 million worth of general funds that we were receiving for several programs that heretofore had been funded by the general fund. Historically, if you look back at our license fee increases, when you see a license fee increase, you see a significant drop in the number of applicants the year that the license fee comes in. And I would just like to report to this committee that last year we had almost a 20% increase in non-resident fees. The only drawing that we have completed, the application for non-resident antelope and deer, was just last week. But in February, the non-resident elk license applicants was actually up about 1% for any elk licenses, which are bull licenses generally, and about 22% for cow-calf and additional licenses. So even with the license fee increase, we saw a fairly significant increase in some of those license applicants as we move forward. And so many states right now are working on what they call R3, recruitment, retention, and reactivation of hunters. And our hunter numbers in Wyoming continue to increase across the board. And just another indicator of that, last Saturday night, I was with the Wyoming Wild Sheep Foundation, and every year they auction off a governor's license. Last year, they set a new record at $95,000 for that license. And Saturday night, they broke that record, and that license sold for $101,000 in Casper, and that's the highest that license has ever sold for in the history of the state. So with that, Mr. Chairman, members of the committee, I'd certainly take any questions that you may have.
Thank you, Director Talbot. Questions from the committee for the director? Got one. Mr. Co-Chair, deep in thought.
I guess I really don't. I don't really know if you're interested in your fees being indexed or not. But if they were indexed, I think we would have to be mindful of the fact that we can't be rounding a license down to the 14 cents or $100, $120 plus 14. In other words, we'd have to put into the model some kind of a rounding thing, so it was to the nearest $5 or something. Or, I mean, how can you help us on, if we go this route, how we should govern that rounding stuff? And the other thing would be the frequency. I don't think we want to do it every year, but maybe for the Game and Fish, maybe every 4 years to update the numbers, or I don't know. Just help me with what your feelings are about that.
Mr. Chairman, Mr. Co-Chairman, there has actually been considerable discussion about indexing a Game and Fish license fees through the years. And last year, in our discussions with joint appropriations that took the lead on the license fee increase to offset for general fund, there was considerable discussion about that. And certainly, the history is that we have offset inflation with periodic license fee increases. And certainly, we could round that up or down, whether that be the 50 cents and we have done that in previous license fee increases when we've worked with TRW or joint appropriations to round those numbers up or down. But certainly, there has been a lot of discussion about that in the past, and one of the difficult issues for the Game and Fish Commission and the Game and Fish Department is that when you manage a wildlife resource such as deer and antelope in the state of Wyoming, those numbers fluctuate naturally significantly. If you look at last year on the west side of the Continental Divide, we had a large mule deer study over there. We lost 100% of the collared fawns in that study due to that winter. That was looking at snowfall in western Wyoming. That was the highest snowfall we'd ever had on record. If you go back and look at antelope numbers in central Wyoming from 2010 through 2012, and the winter of 2010 and 11, while it was not overly cold in Wyoming, statewide we had almost 300% snowpack, and you'll remember the significant flooding we had in this state in 2011. That was very hard on antelope populations. We followed that up with the summer of 2012, which was the hottest, driest summer on record. It was very hard for the survival of antelope fawns and deer fawns, and central Wyoming was almost non-existent. Some of those herd units we were looking at doe fawn ratios of less than 10 when we did that. So there were 2 years of those, 2 age classes of those populations that dropped out as a result of those weather events. And so it's really difficult for the department and the commission to where we are now almost solely funded through hunter license revenues, and to have more stability in that would be very advantageous for the commission and the department to plan our long-term finances.
Further questions for the director? Representative, go ahead.
Thank you, Mr. Chairman. Scott, really just a comment. A couple of weeks ago, I happened to be in Casper during the Game and Fish Expo, and I happened to attend, and I guess I just wanted to say publicly that I was very impressed by that whole thing. Your troops did an amazing job teaching the kids different types of fish, about birds of prey. I mean, the whole thing, it was just very well done, and I wanted to publicly compliment you and your troops for that, because it was well done, and I hope you felt it was a success, because wow, the comments I heard were just amazing. So, yeah. Wow, thanks for bringing that back.
Mr. Chairman, Representative, thank you very much, and that's a priority with the commission. And when we went through our budget cuts in 2012 and 13, we cut almost $10 million out of the commission budget, and conservation education was one of those arenas where we made significant cuts. And this was the first year of bringing back the expo. We thought it was tremendously successful. It certainly it makes one's heart smile to see those kids enjoy the wildlife and the culture of outdoors in Wyoming.
Thank you, Representative Kenner. Anyone else have questions or comments for the director? Okay.
Thank you very
Thank
much.
you. Appreciate your comments. We'll bring up YDOT. Come on up here, Director Panos. Oh boy, and others too. You brought the troops.
Mr. Chairman, it's good to see you. It's good to see everyone on the committee. I hope your spring's been well. We were just in Sheridan yesterday, meeting with our Joint Transportation Committee, so speaking about this very topic, not just indexing necessarily, but funding. And so it's a timely conversation. I'm also on my way to DC next week to talk about this very issue with the Senate APW committee, not just for our state and rural states like ours around the country. So timely discussion, so I appreciate the opportunity to be here. As you know, the committee knows the mission of the Wyoming, I should introduce Dennis Byrne is our Chief Financial Officer, so he's up here to answer all the questions that I can't, which are probably all your questions. No, I'm kidding. We'll answer them. I wanted to make sure we were here in force to make sure that we had an opportunity to answer any of your questions that you may have. You know, as you know, the Wyoming Department.
Then you have another person.
Oh, and well, we've got several people actually. Melissa DeFreitas helps us with government affairs in the back. Rodney helps us with all of our budget issues as we go forward. So
Thank you.
We brought a number of folks with us. You know, as you know, Mr. Chairman, the Wyoming Department of Transportation has a broad mission, not just highways and roads that we're most aligned with, but the Wyoming Highway Patrol, our work on emergency communications. Right now we have 31 landslides that we're dealing with for the state of Wyoming, 9 flood control systems. We respond and then repair. And so that's about 40 of them that are going on as we speak. Some in this county, this very county we're sitting in. And so, so we do that. and also airports and other transportation systems. It's important to note for the committee that 60%, greater than 60% of our budget goes directly to contracts and job creation here in Wyoming. So we don't handle all of our budget. We pass it through to Wyoming contractors and professional organizations around the state, consultants, et cetera. That about $94 million annually, I have to say no to my district leaders, my district engineers. We have a district office in 5 different places around the state. And I have to say no to them for about $94 million of every year of the things that they say they need to manage the transportation system as we speak. And so we recalculate that every quarter or so, but right now it's about $94 million. Our condition and of our highways and roads are eroding. Some of you have some information from us, and we'll keep you posted about the fact that our roads and highways are eroding. In fact, we're not number 1 anymore. We're probably number 10 and falling pretty quickly on the bridge side, less quickly on the road side in terms of our pavement condition. It's also, and the thing we talked about actually extensively yesterday, our retention and recruitment is becoming extremely difficult, particularly in our law enforcement area with the Wyoming Highway Patrol, but also in all of our units. We're having the lowest amount of responses to our job advertisements that we've ever had, and we're having trouble retaining those people. And it's not the normal energy booms and we lose people. This is a more structural problem that we're seeing because of the record unemployment rate in the nation today. We're seeing the same effect in the private sector. We're seeing the effect now in public agencies. So it's not just a WYDOT issue. It's a Department of Revenue issue. It's a Department of Fish and Game issue. It's a Department of Transportation issue. It's all of our departments. Health, everyone is starting to see the effect of the low unemployment rate in our nation. And so we're having problem retaining and recruiting state employees across all of the agencies. And so I think that's important to recognize as we go forward. We're going to do that obviously in partnership and take care of a lot of these things in partnership with our legislative partners as we go forward. But there's a lot going on. So I wanted to set up a little bit of context. Currently, as you know, the transportation funding in Wyoming comes primarily from 3 sources: federal money, state highway user fees, and federal mineral royalty and severance. We had general fund. It's moving downward. It's almost 0 now. And we don't have any state borrowing here in our state. We're one of the only states in the United States. Actually, we are the only state in the United States that does not borrow for transportation projects. We never have in our history. We actually, when I was back giving some testimony about a year ago back to Senate EPW, the staff didn't understand that, and we had the state treasurer go back and look in the records, and sure enough, we're the only state in the United States that's never borrowed for a transportation infrastructure project. So we have these 3 sources: federal money, state highway user fees, and federal mineral royalties. State highway user fees include registration fees, driver's license fees, and state fuel taxes, which are not indexed to account for the loss of buying power due to inflationary effects. Said another way, almost immediately upon increasing a user fee, the financial benefit of that user fee begins to decline. As a result of that decline, maintenance and construction projects are delayed, causing a backlog of necessary projects that would otherwise maintain or improve our transportation infrastructure. We were asked by the Transportation Committee yesterday, when do you start turning away federal money? It's an interesting question. And we actually had to go back and do some analysis on it. Because remember, the 50% of our budget comes from the federal government, 50% of the budget comes from state government. And these sources: user fees, FMR severance, general funds going down to 0, no borrowing. So those are the 4 state. The federal government has 2 different ways it funds us. Formula funding, which comes through our tax reallocation, federal tax reallocation. And that's about 90% of our funding. And about 10% comes from what we call federal discretionary money, or grants, right? So the federal formula funding is a 90-10 cost share. So the question became a 90-10 cost share. We have the best cost share in the United States. The discretionary money, and that's flat, by the way, the discretionary money is rising on the federal side with the variable cost share. So the question became, when do you start turning away federal money? And it turns out that we start questioning it at about 26%, and we start turning it away about 30%. Because we can't afford to delay any other projects to do that. I had a conversation with the senior staff of the Secretary's office at USDOT last week, and they had indicated to me that they had a grant for us. but that we were going to have to come up with $3 million more to get that grant because they needed to spread the money out more and more. The cost share match that we have to come up with is going to continue to be variable. It's not going to stay steady at 10% any longer. So states like ours that don't have a lot of resources are going to have to continue to try and find ways of being able to be in the right position to go after that federal funding when it becomes available in a variable match structure that we have not had in the past, but that we will have in the future. By the way, it was enough so that the grant was enough so that we said yes. So we will expect to continue to say yes, but we need some tools to be able to do that, and we want to work in partnership with our legislature to do that. So as you have this conversation, I want to thank you for it, because I want to thank you for having this conversation here in this Revenue Committee, but also in the other legislative committees, because we need, as an agency geared towards transportation, we need to continue to have tools so that we can respond and say yes to the federal government when they want to bring us several $1 million for a transportation project here. We cannot rely on the systems that we had in the past as we go forward. I just want to take a look here. Oh, a couple of points that were made earlier. In 2013, when the fuel tax was passed here last time, 6 other states in the United States passed the fuel tax at exactly the same time. All of them indexed except Wyoming. It's an important point to make. The adjustment in 2017 that was made to the registration fee for the first time since 1975, and to the driver's license fee for the first time since 1994 or 96. 96, since 96. Those were to replace $50 million in general fund that were being requested by the legislature to be removed from our budget. It was replaced, and we were short about $4 million, $2 million a year in that replacement. So it wasn't as though that was to raise money. It was just to replace money that was needed, general fund money that was needed by the legislature in another place in the budget. And of course we said yes. And the idea was to change those to replace those dollars. So that wasn't necessarily an increase. In fact, it was a decrease of $4 million in the biennium, $2 million a year, to the availability of state money to match that federal money that was coming in. I think that's it. The 26% was the last thing that I had here, because that was an important question. It was actually hard for us to come up with when we say no. But we say no around 26%. We start thinking about it around 26%. We definitely say no at 30%. So the federal government came to us and said, we have a grant for you, but you're going to have to come up with a 30% match. We may turn it away because we just simply don't have the money to be able to afford that. We certainly can't afford some of the other grant proposals that they have out, the discretionary money that they have out, that's 2080. Well, we can't afford that. We say no to those. Those are inaccessible to states, not just Wyoming, but states like Wyoming across the United States. So we support the idea that you're having the conversation about improving the tools that agencies like ours have to meet the mission that you have given us to meet for transportation, law enforcement, emergency response, and air service here in the state of Wyoming. So we appreciate the conversation you're having, and we're available for any questions that you have, and so is our team here today.
Director Panos, are you seeing from the federal level more and more of those 30% offers for grants? Are they becoming more and more of a standard? And if that's the case, then we're definitely in a world of hurt. Is that happening more often than not?
So let me go back. 50% of our money comes from the federal government. 90% of that 50% comes in the form of formula funding, and about 10%, and that's flat. In other words, it's not, the formula is not increasing in any way. The other side, the 10% that is discretionary money or grant money, is actually rising quickly. Let me give you an example. We have a grant program on that side called Tiger Grants. You've heard of these grants before. It's a great name, so people remember that. There's a number of different grants that are available, but Tiger is a great one. We have been working hard back in DC, especially with this new administration, in improving the way that we fund our federal grant programs to make it available to rural states like Wyoming. And so they replaced it during the continuing resolution discussion that was done during actually your session. There was a continuing resolution that was passed for $70 billion. And then a number of different grant programs which were funded through that effort. And one of them was Tiger. They actually changed it to a name called Build now. It's the same program, it just has a different name. That program used to be $500 million of grants that were available at varying cost shares around the country. $500 million under Tiger. We received a few grants over the years in that program. Last year, we received $16.6 million from that program. It was great. It was to help the Beartooth, and we're just actually fixing the last piece of the Beartooth. By the way, $16.6 million for 1.6 miles of the Beartooth, one of the most expensive projects per mile that we've ever done in our state's history. But it was a great program, but it's very competitive because we're competing against all 50 states. In the new build program, it's $1.5 billion with a $500 million rural state set aside. That came from the efforts of states like Wyoming. And that $500 million is now highly competitive for us, and so we're going after it. The grant that I discussed with you is part of 4 grants that we've submitted under that program to go after. But we need match dollars to do that. And that's the point, I think, of your discussion is the condition is changing, and it's becoming competitive, and we have to be ready for that competitive environment. We're not going to see it in formula anymore. We're going to see it in discretionary grants that we are creating space for rural states, but we need to stay competitive in that grant. So the federal delegation's done a great job of helping us with this. They got that through. And we see that in a lot of different areas in transit. We see it in air service. We see it in airport construction. We're even seeing it in law enforcement grants that we're going after, but we need to be prepared to go after those as we go forward. So these discussions are very helpful towards that.
Okay. Other questions or comments from the committee to the director or his staff? Senator Case, we'll go you first, and then Representative Obermuller.
Thank you, Mr. Chairman. Following the Department of Transportation over the past few years, I've seen 2 particular challenges. One is WyoLink and funding for WyoLink that seems to be an issue. And then the second is the Interstate 80 and providing secure funding for, what I'd heard before, and the committee might recall this, that Interstate 80 is such a huge piece of the budget and promises to be in the future as the growth in traffic on that highway continues. What are the funding options for those things that you're looking at, and how does that relate to indexing? And I might follow up, Mr. Chairman.
So on WyoLink in particular, let's talk about that. One of the, we took over WyoLink from Homeland Security and from the governor's office about a year ago. Since that time, we've completely rebuilt the entire governance structure, financing structure, decision-making structure, and the resources that are associated with WyoLink, including the relationships with city and state and county government. And that's been remarkably successful, but there's still a long way to go. We still have a long way to go there. One of the things we did last year was to finish the capitalization of the WyoLink program, is we negotiated with our federal partners, the Federal Highway Administration, to allow us to utilize that as an expense under a couple of our programs. They agreed. And so we were able to put $16 million into the finishing the capitalization of WyoLink. And that's actually going very, very quickly. We're actually with the local communities, the cities and counties and law enforcement agencies. We're siting the remaining towers now and under construction with the last 16 towers. So we're doing very, very well there. Let's see how we look a year or so from now in terms of the capitalization. We still have questions about modernization, how we're going to fund that, and then city and county costs and how we're going to fund that. But our county and city partners have been very good about that, and the legislature has been very good about listening to that and giving us some space there. In fact, I think that you passed a bill to extend some of those requirements for another couple of years, and that gives us some room to work with. So we are pursuing right now grants from the federal government on the modernization side and on local community costs, and we'll see how that goes over the next year with this changing discretionary fund environment, but we're on it. And we've progressed significantly. We still have a long way to go, but we're on the right track. So it's in the mainstream of the WYDOT thinking, if you will, and our financial systems and our construction systems, our design and engineering, and our communication systems, our relationships with the cities and counties. And so it's in that mainstream now, which I think is a better place for it to be than outside of that, as it was before. So I think we're doing better on WyoLink. It's not finished, but we've got a ways to go, but we're well along. On I-80, 2 pieces. I won't get into all of the discussions about I-80, but I can talk to you about 2 things. It's very rare that we would see a Senate committee, especially the Senate Environment and Public Works Committee, the staff from that committee, visit any state. They spent 4 hours with us a few months back here in Wyoming. They flew out to actually meet with us about I-80. They see I-80 as a national piece of infrastructure because of the amount of freight that's moving through that. That focus on I-80 is a big deal for Wyoming and will help us as we go forward. The fact that the Senate, the senior committee chair, or the senior committee staffers, the staff director or staff deputy director came out to see us is also very significant in the sense that we began talking about the I-80, I-25 interchange. We've talked about the entirety of all 400 miles of I-80 and whether or not we could construct something as in the federal condition as maybe a phased mega project, something where we would be able to kind of improve I-80 all the way across. So those discussions have started. We have, I don't have anything to report yet on the outcome, but we would, if we were to do something like that, start with I-25, I-80 interchange. That's about a $400 million 9-year project with 4 phases. And again, vast majority of that going out to contracts. And then move through the entire system. The system would be a $6 billion build and would take anywhere from 15 to 20 years to complete. But we've got to start somewhere. We've never seen projects like that in Wyoming. And I think it's a reflection of our improving federal relationship, but we have to come up with a match. Can you imagine the federal government coming to us with an I-80, I-25 proposal of $400 million and we didn't have the $40 million to match it? Can you imagine the federal government coming to us for a 10-year or 20-year, $6 billion improvement project for all of I-80 and we didn't have the match? So we have to talk about all of this as we go forward. But these kinds of discussions are helpful, and it's helpful to us as an agency. It's helpful for them to see this as we begin to reposition ourselves as a rural state in light of the new discretionary funding from the federal government. The second thing about I-80 is the improvements that we're making now with federal supports, some $4 million, and we should see an extension here pretty soon, but at least a $4 million pilot program to do connected vehicle projects. These connected vehicle projects are focused on our freight industry and are trying to, once deployed, and they are being deployed, by the way, this summer, once deployed fully along I-80, will reduce the incident. In fact, are designed to reduce from now forward the incident of multi-truck crashes on I-80, which are keeping it closed for multiple hours, days sometimes, because we see so many trucks piling up during a snowstorm or other weather event. In December of 2016, I-80 was fully open and operational 6 days. 6 days in a month. That cost the country and our state millions, cost the country hundreds of millions of dollars of it being closed. That's why the federal government recognizes that as a national corridor and why they're trying to give us dollars to do improvements there and why they're trying to improve connected vehicle technology, specifically with the freight industry, to avoid crashes and to keep the highway open in a more frequent way, especially during our difficult seasons in December or January, February, those kinds of things. So those are 2 things that are going on right now on the federal side on I-80 that would help. But again, we need state money to match federal money as we go forward.
Well, Mr. Chairman, it is definitely related to the index subject. So it just strikes me that if we had a way to receive compensation for I-80 that was indexed to the wear and tear that vehicles put on it and the use of the very important corridor, that it seems that as a form of indexing to put the cost causer with recovering that cost, we should index I-80 by having tolls on I-80, and I wonder where the department is at with that, and if that discussion is still on the table as being possibly the only way that we would be able to match cost causers and costs in an index manner, Mr. Chairman.
So as it relates to user fees, again, we don't support any one, we can't support or don't support any as a department, one user fee over another user fee. But what we can tell you is that user fee are part of a spectrum of funding that other states, rural states have used, including general funds, index, FMR, severance, energy, taxes, things like that. And for us, what's the fourth I'm missing? Highway user fees, fuel tax, those kinds of, FMR and severance. Sorry, can you just hand me that? I appreciate it. Thank you. And general funds, and borrowing. That was the last one I was looking for. So that's what most states use, those 4 components. So that's really the dials to turn. So you turn one down, you're going to have to turn one up, or you turn them all down and you don't have match. So it's that spectrum right now that's available to us and available to most states. And let me go over it again. General funds, state borrowing, FMR severance, and other state funding from energy taxes or other taxes like that, and then highway user fee funding. So some states have done tolling. Tolling's not really done in the West. When you look at all of the, when you work with the National Council of State Legislators and others, they'll report to you that a lot of tolling is in the Eastern Corridor and some of the heavy freight corridors up in the steel belt, up in Indiana, Chicago, Detroit, that area. You see a little bit in Florida, but it's mostly East Coast. You don't see a lot of it in the West Coast. You see some of it here. You'll see user fees associated with some, but not a lot. The federal government has opened up some of the use of tolls now through that last CR that I just talked about, where we changed some of the grant programs, the discretionary programs, to open it up a little bit. But again, it would be one of many sources. It's just like any other financial portfolio. Having diversity creates stability. The lack of diversity creates instability. So as you think about that, I think it's important to keep that in mind. And most states use a variety of different sources, not one or the other.
Right. Thank you. Representative Obermuller.
Thank you, Mr. Chairman. I want to change the focus here from the federal system to the state highway system. In looking, Director Panos, in looking at the document that you prepared, when you look at the condition of the roads in our state, in the interstate system, the pieces that are categorized as poor to fair condition are roughly around 10%. But when you go to the state highway system, that number moves up to close to 40%. And when the roads are in fair condition, they're drifting toward poor condition, are they not?
That's correct.
So we have a problem with our state system. I think it's a safety problem for our workforce. A lot of our workforce are out on the roads, and here our state system is in this kind of condition. So my question related to indexing is indexing the solution to this, to where we move the needle on the condition of our roads, or is there another component? Are there deficits, backlog deficits that you now have that indexing won't solve? Is indexing a piece of the solution? Could you address that, sir?
Director.
Mr. Chairman, again, as not supporting one thing or another, but what we can say is that indexing of highway user fees, indexing of other funding has been a tool that other states have utilized to support their transportation system. I think we did a chart for joint appropriations that they asked for that show if we were to index, let's say, registration fees, and we were to index driver's license fees. You would see about, since 1990, I think in 99, is it, or 2000 or so, you would see, it's hard to read those in pieces because that's just driver's license fees. So the total is about 400 million. I think you have that in your packet. So, and the fee would have changed by a penny. So indexing is utilized as one of many tools for matching funds, and then also we do a great deal of state only, where the federal government is not involved at all, state only construction projects for our bridges and roads, especially on the part of our transportation system which does not qualify for federal funding. And so remember, we have that too. And I would also suggest to you that another huge part of our transportation system here in Wyoming is our rural roads, our gravel roads, our bridges that are associated with those kinds of unpaved roads, and even paved local roads, counties and cities. So remember, we have a full spectrum of transportation needs. We have the federal highway system, which the federal partner helps us with. We have a state highway system that's only us, and we pay for only without federal help. We have city and county that we support a great deal in the state for their road system. So all of those should be looked at, and I can tell you that when we look at all of them across the board, our road system is degrading, bridges first, state highway system second, and then the federal system third. And the only reason why the federal system is not along with the state highway at the same pace is because there's federal support there, and we're doing match funding for our federal program. So keep in mind as we go forward that this this system that we have built with federal help, but that we have built with a lot of our own money here in the state of Wyoming, is the core of our economy. It's the core of our tourism economy. It's the core of our energy economy. And it's the core of our agricultural economy. We cannot have those three economies without the ability to move things, people and goods. I know it sounds basic, but it is the basic role of government associated with our economy here in rural states like Wyoming. So it's at the core of those three economic structures to have sound, functioning roads. Fancy roads. I mean just Chevy roads. Sound, functioning roads and bridges.
Thank you. Further questions or comments? Follow-up, Representative Obermuller.
Just follow up on the question about indexing. Is your testimony that indexing would solve our problem as the state's responsibility for our state roads, or is there another piece to this? Is there a structural deficit in maintaining, right now, maintaining these roads that indexing isn't the answer to, that you're just underfunded in certain ways to bring the state program up to the level that we're responsible for, up to the level that the federal government takes care of? The part that's our responsibility, what is our shortfall there, and so that we know what we're facing here in terms of revenue needs in your department?
Director?
Thank you, Mr. Chairman. There's several questions in there, so let me be concise, if I may, so you can move on. The first is that indexing alone will not solve the problem, but indexing will help. Things like indexing. And I'm not suggesting indexing alone. I'm not suggesting indexing at all. I'm just saying things like that, those kinds of tools. Having a broad, my testimony is having a broad-based system of state supports is better than having one thing. So having many things that you do. So again, I'll go through general fund, borrowing, FMR and severance in our state, and highway user fees like fuel tax, registration, driver's license fees. All of those help. And usually the solution is a broad base of that. That's what every state does. And so having, a broad base of support, state support for the transportation system is the solution. I can't tell you one or the other is better. I can only say all of that is in some combination. The second thing is I've given testimony, and I'll say it again, $94 million a year. I cannot provide $94 million a year of needs that my districts are asking me for. So today, right now, I cannot provide $94 million of that. So you can call that what you want. I don't know if I'd call it a structural deficit, but it is me not meeting the needs that are being identified by the staff. They're saying, I need $94 million that I can provide. So I have to say no to them, to the $2 a year today, right now. So you can define that any way you'd like.
Okay. Thank you. If there are no further questions from the committee for the director, we'll excuse them, and then we'll open it up to,
Thank you, Mr.
Director
Chairman.
and
It's
staff.
great to see you all.
Appreciate you being here. Public comment on indexing, this subject that we've talked about this morning. Any public comment? Come on up. Keep your comments brief because we're running out of time. We got one more important subject to talk about today, and that's the tobacco tax issue.
Brett Moline, Wyoming Farm Bureau Federation, speaking against indexing. Being based on an inflation rate, adding another factor, that inflation rate of increased government fees automatically, will in turn increase that rate of inflation. Perhaps small, but still another increase. Another concern I have with indexing is maybe it will keep something from being as efficient as possible. It'll keep them from looking as actively for other options to improve efficiency. For an example, when we talked about the increase in driver's license fees, we never talked about increasing the length of time your license was good. We keep it at the current time. What if we move that to a longer period of time as one example? Perhaps that would be less burden on the department, reduce costs, and allow that money to be used for other things. And with that, Mr. Chairman, committee, I would sit for any questions.
Any questions for Mr. Moline? None. Okay.
Thank you.
Thank you for your testimony. Anybody else? Invite anybody else to come on up? Come on up, Mark.
Thank you, Mr. Chairman. Members of the committee, Mark Larson with the Wyoming Petroleum Marketers Association. We're the jobbers and distributors that collect and remit the fuel tax, and we are also significant highway users. We fully recognize that the highways are definitely the lifeblood of Wyoming's economy. It's the lifeblood of our economy as well. The Petroleum Marketers Association of America is opposed in general to indexing. Each of the automatic increases represents a separate tax hike, a form of taxation from our perspective that's really taxation without representation when you look at it over the period of time. We feel that it lacks the transparency necessary to keep the voters engaged with the process and the needs of the state. Now, having said that, I understood Chairman Madden's comments earlier about 2 years of his life expectancy being reduced on the same issue. I have to tell you that our petroleum marketers had that same issue. When that gas price went up 10 cents a gallon, you've got to believe that the people that were paying the tax at the pump were inside telling us about it. We understand that notion. When we look at the tax structure in the surrounding competitive, and Representative Furphy, you got to it from our perspective, there is room for that discussion without indexing to look at a tax increase as long as reasonable and considering the other states. Now, I bring this up because when you look to the state to the south, they will never be a tax increase on gasoline because in that state they have a taxpayer bill of rights. It says specifically the taxpayers will always have to vote on that tax. I don't see that happening in Colorado, and I don't know what they're going to do to remove their problems. But in terms of competitiveness, yes, there's the other states that are surrounding Wyoming. Yeah, I think there's some room there. Let's have that discussion. We are opposed to the taxation or the indexing. The one solution when we look at it is, from our perspective and from PMAA's perspective, is the federal government needs to look seriously at tax increases with CAFE standards, reducing the amount of gasoline and taxes that are being paid by the consumers, and that a federal tax would float all boats. Then we're not in that competitive structure that we're relegating to each of the states to come up with their own solutions. I'll stand for any questions.
Any questions from the committee for Mr. Larson?
Thank you, committee.
Thank you. Anyone else? Welcome. Be sure and introduce yourself to the camera.
Good morning, Mr. Chairman. Sheila Furch with the Wyoming Trucking Association. My members have not taken a position on indexing. We have had discussions over the years, and the last discussion we had was in the latter part of 2013. And that was at the request of the American Trucking Associations, because at that time and currently ATA is advocating strongly for an increase in the federal fuel tax. That tax hasn't been increased since 1993. So we see the same issue that we saw in the state of Wyoming at the federal level with a lack of movement on that type of federal tax increase. So ATA reached out to all of the state trucking associations and asked them what their position was on indexing the federal tax, because there were several options on the table. None of them came forward, obviously. I'm still working on that, but they were very interested in what states felt. My board had a very long conversation about their position and chose at that time not to take a position because they wanted more information about what the index rate would be tied to, if it was a CPI or what, if there was a ceiling to that tax increase, and how often it would be increased. Fuel taxes, fuel costs, which include the taxes, have a huge impact on the operational costs of a trucking company. They're very sensitive to that. Having said that, we were very active in the coalition to support the fuel tax increase when Wyoming did that. We were also supporting a fuel tax increase for the several times before that when it was unsuccessful. So we want to be engaged. We do support a strong funded highway system because that's where we do our business. Our trucks are on those roads. We need a safe, efficient roadway. So while we're not necessarily supporting an index at this point, we need more information before we can take a position on that.
Okay. Thank you. Any questions for the Trucking Association? Sheila? Okay, thank you.
Thank you, Mr.
Anybody
Chairman.
else like to provide some public comment on the indexing issue? Well, we'll close public testimony then. Committee, what's your wishes on this particular issue on indexing? What are your thoughts? Personally, I think it's an issue that we need to carry forward and continue to look into, and possibly at the end of the year, interim, come up with some type of a bill, or maybe touching on some of these different areas that we've talked about today. Mr. Co-Chairman, your thoughts?
Well, thank you. This has been a good discussion. The one thing I think we need to be mindful of is that indexing fuel taxes is not a panacea for, I-80, or it's not a panacea for state roads. All it is a way of keeping pace and treading water, so to speak, with the purchasing power of what we established back in 2013. And what I would, refer to is page 9 of Mr. Tempty's handout. If we had, essentially what it says, if we had indexed from 2013 up to 2019, which is 6 years, the price would be 25.7 cents a gallon, or up to 2018 it'd be 25. So, you look at that and you say, is that going to be a problem with dealing with that? Is it going to have a public relations problem? On the other hand, you look at it and it brings in 11.57 million in 2019 alone. And looking at it throughout the whole thing, I think the local governments, as well as the highway fund, would be at least that one section that Mr. Panos was talking about. That one source of funding is not going to decay away and go away. So I agree with you, Mr. Co-Chair, that I think we need to carry this forward, and for that, I think we need to have something tangible to look at in a future meeting, and also give LSO some direction on how to proceed. So perhaps we could look at this way. If we look at it indexing using the CPI, which is, as you see in the research that Mr. Tempty's done, is what most of them use, do that, and then have a kind of set it up so that it's done on alternate years, and it would be done in odd numbered years, calendar years, and perhaps done prior to the beginning of the next fiscal year when that odd numbered year occurs. The other thing I think we would need in the bill would be some kind of a condition where it's secondary if the Transportation Committee, for example, wants to raise it 6 cents, that trumps the indexing. In other words, if the rate prices or the taxes increased autonomously from just changing the rate, we wouldn't index on top of that. And I guess the other thing would be we would want it not to go out to 2 decimal places like your handout shows, but maybe 25.7% or 25.7 cents would make easier for people to understand than that. So I guess that'd be my motion. With those kind of conditions, we'd have to have a bill prepared for the fuel tax indexing that we can consider later on in the interim. Now, if we want to add the other ones, we could do that too, and maybe that would make it even better to look at. But I think that these fixed volume things are things that get away from us if we don't keep up with it. Thank you.
Thank you, Mr. Chairman. With that motion, do I hear a second? Seconded by somewhere down there. Oh, Representative Overmuller. Okay. For the discussion on the motion. Are we ready to vote on the motion? Okay. All those in favor, say aye. Aye. Opposed, no? Yeah, I would say that passed, but I just, we'll have to have a show of hands here. All those in favor, raise your hand. What's wrong with the left side here? All those opposed? Yeah, those are 1, 2, 3, 4, 5. 5, yeah. All right. 5 opposed. Okay, that motion carries then. Also, we need to keep in mind that some of these issues that we're talking about, some of these different subject areas, different departments, we have other committees working on it. You mentioned it, Mr. Coachman, of transportation, maybe JAC, and as well as maybe Wildlife Recreation Committee with the Game and Fish. So we'll have to notify them as well as bring up to date on what we're working on and likewise what they're working on, so we're on the same page. But any other comments on this subject before we leave it and go on to our next? We're going to take a quick break. Let's take about a 10-minute break. We'll come back at 11 o'clock, a little bit before 11, and we'll talk about this last subject of tobacco taxation. Day of statewide stamping of tax, cigarettes, tobacco tax. To start things off, we'll ask our LSO staff, Josh, or someone from the LSO, Josh, come up and give us a brief overview of the bill that we had introduced last session and remind us of what we were trying to do. And so we'll begin there, and then we'll let the Department of Revenue speak a little bit if they want to, and then any other departments, and then we'll have some public testimony. So go ahead, Josh.
Sure, Mr. Chairman, Josh Anderson, LSO. Last year, we did House Bill 43. What this did was mostly pretty simple. It took the existing tax from the current rate of 60 cents a pack up to $1.60 per pack. It did equivalent increases to the other tobacco taxes. Then in Section 2, we implemented a floor tax to address the issue that had been raised by the Department of Revenue of people being able to buy the stamps up and delaying essentially the implementation of the tax. And then in Section 3, on page 6 of the bill, we attempted to make the bill effective only after the state comes to agreement with the two tribes to impose this tax throughout the state, including on the Wind River reservation. That was essentially the bill. If there's any questions.
That last section was in regard to the concern that there might be some type of unfair competition as far as retailers in Riverton or Lander having to submit to this increase in tax at $1 per pack when those cigarettes might not be stamped or stamped but not the tax implemented on the reservation. So of course the marketers in Fremont County were concerned, and that was just one of the concerns with that. So that's why that section was put in there, if you remember, committee, of trying to get this agreement or compact or with the tribes taken care of first before the tax were to be implemented, so we didn't create that unfair advantage. So any questions, any comments? Senator Case.
Mr. Chairman, thank you very much. Just by way of prefacing this, I think the testimony we had previously was that smuggling of cigarettes based on tax jurisdiction is an issue, that smuggling of cigarettes based on tax jurisdiction becomes more of an issue when the tax differential becomes higher. And so I kind of, Mr. Chairman, I want to push back on gently on the issue that this is a Fremont County retailer issue. It really is a statewide issue, and I believe if people want to smuggle cigarettes, it'll, and the price differential is big enough, it'll explode beyond Fremont County in a heartbeat, and probably already has. So the basis for this bill was to try to respectfully work with the tribal governments, and we do have Councilman Shakespeare here from the Eastern Shoshone tribe. We're very glad to have you and other representatives of tribes here to help us think through this issue. But the purpose of the bill, and we use the term agreement, and I'm not sure that's the right approach. Doesn't convey to me quite the government to government approach that this whole problem requires. And so maybe agreement is just not the right word or the right approach. But I think if we look at it in a very big picture, increasing tobacco taxes would reduce cigarette consumption. That would be good for people's health. And as a cancer survivor myself, not smoking related, but I do see this is one of the most preventable forms of cancer in the world. And so if we can figure out a way to decrease consumption by having taxes that can be used for preventive mechanisms both throughout the state of Wyoming and under the jurisdiction and direction of tribal governments to use those funds as they see fit. If they were to likewise have equivalent taxes, it would kill the incentive to smuggle, and it would provide good things for people and a revenue source for tribal governments. And that is the basis for the thinking here, and I hope we can make a little progress on that today. Sorry for the long introduction.
Thank you, Senator Case, and I would accept that pushback. That was welcomed. Anybody else on the committee? Okay, anything else, Josh?
And Mr. Chairman, I think, as this bill wrapped up at our last meeting last year, one of the things, we had a question about that never did get resolved was, putting some sort of a drop dead date in that last section 3, just because, it could sit out there for 50 years and be lost to time. So just, have some sort of a date in there, whenever that would be, but just for cleanliness in the statute books.
I think that would provide the incentive to get on with it and not let it just languish out there. So appreciate that. Any other comments before we turn it over to the department? Revenue, anything to add? As you remember our efforts last session and what we're trying to do at present.
Morning, Mr. Chairman, members of the committee. I'm Dan Noble, Director of the Department of Revenue. Probably discuss a little bit about what the existing agreements are with the tribes today as it relates to this product. Currently, we license several of the wholesalers in the state to sell unstamped product onto the reservation, and they report the number of unstamped products that they sell onto the reservation. On the other end of that transaction, we have agreements with the retailers on the reservation to provide us with an estimate of the number of of the cigarettes that are sold to non-Native Americans on the reservation itself. Those are estimates that are made on an annual basis and are reported to us by those retailers. Those retailers then, in turn, as the year goes on, make payments associated with the products based on those percentages to the state, and those payments get distributed under the normal distribution for the state itself. There was a request of me I believe it was in 2011, to look at what a possible solution may be to determining how to allow the tribes to benefit from the taxes themselves associated with this, and do away with this issue of unstamped product being sold on the reservation. We are members of the Master Settlement Agreement as it relates to the sale of cigarettes. And one of the concerns that has been raised across the country by the signatories of the Master Settlement Agreement is that there are unstamped products being sold. And they feel that creates a potential for market share creep as it relates to some of their products versus some of their competitors' products. And that is something that, as part of the Master Settlement Agreement, we are, as signatories as well, are to try to prevent, is market creep associated with pricing. And taxes being avoided in certain areas versus others. And that's one of the things that we're attempting to do here, is recognize that while we do not wish to tax the Native American population, we got to recognize that we have to ensure that there are taxes paid to the non-members of the tribes on the reservation as well. That creates some difficulty when we're looking at, not only from our perspective, but also from a retailer's perspective. When you consider the transactions that are occurring across the counter, how do you go about determining whether a person is a member of the tribe versus a non-member? It's not as easy as you might think. It might be, well, if you don't produce a card, I'm going to charge you a different price. That's tough for a retailer to do, and I think it's probably not workable. I think it might be better to work on what I've seen in some of there's a white paper, I don't know whether it's been provided to the committee or not, but there's a white paper that talks about the different ways that states have worked with tribes to kind of overcome this issue. And one of those methodologies is very similar to the white paper that I prepared for the governor's office that talks about determining the number of the amount of consumption of the Native American population versus the non-Native American population on the reservation, and to prepay that to the tribes themselves to indicate that those are taxes that were paid by your members, and we're going to provide those back to you. That's one method of doing it. One of the other methods is kind of the inverse of that, and is to say that, okay, we're going to determine what the amount of consumption is on the reservation, and we're going to sell only those amount of unstamped cigarettes to the populace on the reservation. Well, that's probably creates its own set of problems as well, because now you're still selling the unstamped product. And, you know, at this point, I think, as Senator Case has mentioned, is that we probably need to sit down and try to figure out what works for both sides of this equation, and ensure that the appropriate amount of taxes get paid, but also that the appropriate parties receive the taxes that are being paid by them as well. And quite frankly, there's a number of different methods that are described in this white paper, and I think there are things that should be looked at. One of the things that is interesting about the process currently is that is what's mentioned in the paper, and that is that there is really a lack of jurisdiction as it relates to our ability to ensure that this is appropriate or not. And I think that's why these agreements exist, is to try to overcome even the need for some level of trying to enforce any of this, is to really develop a mechanism that works for both sides to this issue. The agreements that we have in place currently are just estimates associated with what they think the non-Native American sales are, and the taxes paid on it. When you consider what happens there, those are taxes that are probably being assessed across the board by increasing the price to where you can cover that cost, and everybody pays it, including the Native American population as well. I think that's when you consider that, is it really the appropriate outcome? I'm not so sure, but you know, as a retailer, you're going to sell something and make a profit on it, and if that tax eats into the profit, you're probably going to adjust the price in order to accommodate that. And that's, you know, one of the concerns I have is that you got unstamped product, you're selling that to everyone. However, you have to adjust the price in order to accommodate the taxes that are going to be paid by that, and that really ultimately bears a tax on everyone at that point. And I'll stand for any questions you may have.
Any questions for the director? Representative Conley, go ahead.
Thank you, Mr. Chairman, and thank you, Director Noble. First, could I ask that you send out your white paper to the entire committee? I should have brought my copy with it, because I think it was done really well, very interesting, but it also gave dollar figures, and they were not insignificant to the amount of money that, you know, based on kind of some simple calculations and then extrapolations, the amount of money that would go to the tribes that they're not getting right now, and then also would come to the state if we stamped all cigarettes. And if I remember correctly, it was at least $10 million. I don't remember off the top of my head, but do you?
Mr. Chairman, Representative Conley, I do not necessarily. It's, like I said, it's been a few years back, but I can certainly, I still have the document, and I can send it to you. Certainly.
Thank you. And Mr. Chair.
I'll send it to the entire committee.
Conley.
Great, thank you. And just to continue that, you know, I agree with Senator Case that we absolutely need to look at this as a conversation and a negotiation with a sovereign nation, and that we need to come up with, I guess the agreement would be the word for it, but that it would be significant changes that could benefit both sides when it comes to money, but also to kind of address issues regarding kind of consumption. And if I remember correctly, again, that there were figures that were done about the expected decrease in consumption if we raise the the taxes by $1, for example. And all of those are addressed somewhat in this bill. But going back to kind of talking about and with the tribes, that it seems to me that the evidence from the national data and the white paper there and what you did is really illustrate that we can address lots of issues by having a good agreement rather than at this point kind of just an old one that's out there. If we all agree to stamp cigarettes and remit a lot of money in different ways. Don't you agree?
Director Noble. Dan, you got to push your button. I think somebody flipped you off.
I think something's wrong because all of them are, this is live streamed and they won't pick that up unless we have.
Right. We'll get a battery there.
All of them are blinking.
Yeah. Our time is up.
Sure.
Thank you, Mr. Chairman. I might mention that I was actually handed the white paper that I did in 2011. So I can at least speak to the numbers back then, as well as probably some, I think what I would say is some fairly good news related to our existing tax structure. First of all, I'll talk about the overall basis is the fact that we have seen a decrease in the tax associated with cigarettes. Yeah, the revenue total across the board. We're selling less cigarettes today than we have been in the past. And I don't know whether that's just because of price, whether that's just because of the social mores associated with the product itself, people recognizing the health issues associated with it. There's an awful lot of things that could play into that. But it's also decreased on the reservation as well. The number of unstamped products sold on the reservation between what the 2011 when I wrote this report and what we're selling today is less as well. So that's good news, I think. If you're looking at the fact that we're reducing cigarette consumption in the state, I think it's a good thing. The amount, and this was done on a creating I guess what I would call an arbitrary distribution formula on the reservation associated with considering the population and how much of the population are considered smokers, the fact that you have to recognize the adult population versus minors. And what we looked at was, if you estimate this, we'd look at roughly 917,000 packs being consumed on an annual basis. The revenue generated associated with that for the tribes under this proposal would be about $500,000 a year. The remaining portion of that would go to Fremont County and to the state general fund, and that there would be roughly another 100,000 and another 25,000 to the state and to the local coffers, just based on utilizing an arbitrary distribution formula. And believe me, when I put this out, I'm just basically saying if we made this assumption that 50% of the tribal membership was an adult population, and that 50% of the adult population was smokers, and assumed 1 pack of cigarettes per day, would be that we came up with 917,000 packs of cigarettes at that point. That creates a net benefit to the tribes, to the state government, and to the local government as well, by ensuring that all products are stamped. And that money, the assumption here would be that the money based on this formula would be distributed back to the tribes and provide them with the benefit associated with those taxes that are being paid. And you think, when you consider what's happening today, there's a portion of that's being paid by the tribal members anyway, and it just seems that there should be a benefit associated with that. There's another mechanism that was used, but both of them returned roughly the same type of an environment. And really, when you look at what that proposal did, it does pretty much exactly what is being done in some states, where they basically say we're going to allow a certain number of unstamped products to be sold on to the reservation, but the rest of those stamped products would be sold as a stamped product. It accomplishes the same thing, however, you're looking at a direct distribution here versus just arbitrarily assigning the number of unstamped products that are sold onto the reservation. Just a proposal that was offered at the time, and I don't know exactly how, how it would be received, but it was something that I was asked to come up with an idea for, and I provided it to the governor's office. And like I said, I'll stand for any further questions.
Appreciate that, Dan. Any questions or comments from the committee? One, Senator Case.
Mr. Chairman, thank you. So when we look at this, it seems like the best bang for everybody is to have the cigarette taxes be the same all throughout Wyoming, on and off the reservation. And that's the most important thing. The second thing is less important, and that's how the tax revenue is shared between tribal consumption and non-tribal consumption. And for example, we're still better off with equalized taxes, even if we take 100% of the tax revenues that are collected on the reservation and share those, give those to the tribal governments to use as they see fit. So I think we should keep our eye on the fact that equalization of the taxes is of most benefit to all people, and that the distribution itself is somewhat arbitrary, and that could be a negotiated factor, but we're still better off even if tribal governments keep 100% of the tax revenues on the reservation, irregardless of how those cigarettes are sold to Native people or non-Native people.
Agreed. Other comments, questions from the committee for Mr. Noble? None? Thank you, Director. All right. Let's have some public comment. We're great. Come on up, Mark.
Thank you, Mr. Chairman, members of the committee. Mark Larson with the Wyoming Petroleum Marketers Association. We so appreciated the fact that you did listen and the Management Council forwarded this issue. We think it's a huge opportunity both for the state and for the tribe and leveling the playing field. By way of disclosure, in a former life in another state, I was fortunate to represent the Ute Mountain Ute tribe and the Southern Ute tribe, and I learned a deep respect for the sovereignty that we need to make sure that we maintain as we move forward with this discussion. When the paper that I sent out to you all, that LSO sent out to you, gives a good understanding of what the playing field is in the different states that have compacts. Now, I like the word compact. Director Noble mentioned the agreement. Those are a lot more strict, and I think that what we're getting to with Senator Case comments and what we're recommending is that we should move forward on that same premise, that if we do currently prohibit stamping of cigarettes on the reservation, I'm not sure I understand the legislative intent of that when it originally came down. But you will see that many of the states in the paper have moved to a similar situation where all cigarettes are stamped, regardless of where they're going to be sold in the state, and then a compact versus an agreement, because compacts is a lot less strict. It gives a lot more flexibility to the tribes. It gives them the ability to be able to self-direct where that revenue is going to go and how they want to do it. We have no problem with that whatsoever. But in the current environment, as you see in the paper, when you have taxes not being equal and you have taxes being disseminated through whether it's a reservation or however they get to that reservation without a tax stamp on there, there's room for error. We also recognize that in that agreement there's been no auditing per se over the years, and so there's just a lot of room for error there that is not only hurting the tribes, it's also hurting the state and that level playing field. When you look at the document that came out, it shows you that there's a plethora of different agreements out there that can be struck. We have opted to keep it simple. We think that when you look at 17 states have sought a codification remedy of taxing the cigarettes prior to getting to the reservation. So in other words, it's you get it at the distributor level, then all cigarettes are going to be taxed at the state. What we also saw, though, is of those states, 12 have the prepay solution. They also have a compact that goes along with that. And that's the critical piece. So if we're asking the tribes to support a stamping across the state on cigarette and tobacco products in order to seek that level playing field competitively and stop some of the smuggling and other issues, then we also have to recognize that there's going to have to be something in it for the tribes. The agreement that Mr. Noble spoke of is a formula. It's a revenue sharing that goes back to Fremont County, the state, as well as the reservation. We agree with Senator Case and have discussed with Representative Larson as well that the compact that is going to be struck as a result of moving forward with a cigarette stamping scenario would be worked out with the AG's office and with the tribe. Certainly, we're talking significant dollars that would be going back to the tribe for them to be able to utilize in their substance abuse programs or their tobacco cessation programs or wherever they so choose. The Noble document showed what their portion of that formula would be. Just imagine if they're getting all of the tax back for their own benefit and for their own use. We think that is the mechanism in the process that is going to bring everybody to the table, because certainly Chairman Shakespeare and others recognize the benefit to the tribe of being able to utilize those funds for their own benefit. One thing too that it will also do is remove that aspect of the retailers that are on the reservation having to go through the burden of filing reports and going through the process of doing agreements, and instead of having a compact with the tribe and let the tribe decide how they're going to disseminate that and how they're going to operate once we get the level playing field of all cigarettes being stamped. Mr. Chairman, in the interest, I told you I'd be brief. I think that this is not a hard issue. What we would request is that the committee move forward a bill removing the prohibition against stamped cigarettes being sold on the reservation, and at the same time request that the AG work on a compact with the reservations, with the two tribes, and come up with a scenario that would benefit them and get us all moving forward on this topic.
Okay, thank you. Mr. Larson, any questions or comments from the committee? From Mr. Larson? None. Okay, thank you. Senator Case.
Mr. Chairman, we've been joined by Chairman Brown of the Northern Arapaho Business Council, and we're very pleased to see you here. So far, we've had a discussion about the concept of equalizing cigarette taxes levied across the state of Wyoming within the boundary of the Wind River Indian Reservation and outside, but doing it via a compact whereby tribal governments can receive and distribute or use taxes as they see fit. So that's where our discussion is, and we're just barely got started. Welcome, Chairman.
Yes, welcome.
Mark. Mr. Chairman, thank you. I failed to mention that there is already a compact on gasoline that has been worked out with the tribes. It's very similar to what we're suggesting on the cigarettes and the tobacco products. Currently, the tribes are assessed the tax, and they charge that tax to all the consumers, and then they get back, based on the compact, those sales for non-Native Americans. Tobacco products, we envision could be the same way. Whether the AG comes up with something that's acceptable to the tribe, we certainly see a significant benefit financially for the tribe to come to the table with us.
Okay, Thank you.
Thank you, committee.
No other questions from the committee? Okay. We still on public comment? Come on up, Mr. Moser. Welcome. Introduce yourself to the camera.
YouTube. Mr. Chairman, members of the committee, Mike Mosier, Wyoming State Liquor Association. I deferred to Mr. Larson to give the intro on this issue because even though I was the guy who kind of initiated the idea, the deep research that Mark has done as well as others, I deeply appreciate. Just to give you a background on how this started, and I've mentioned it briefly in front of the committee before. But back in 2011, I'd been getting a number of calls, and to tie in with Senator Case's comment, the calls from retailers were coming from Natrona County, places like that, because of the population bases. And remember, it's not just avoiding a 60-cent, or possibly avoiding a 60-cent state excise tax, it's also the sales tax, which Wyoming started charging sales tax on tobacco products about 20 years ago. Back in 96 or 97 or so it changed. And so those two things exacerbated. But the other factor was, and I know this may come as a surprise to some of you, but you're not the first revenue committee to propose a beer tax. And the old beer tax, tax proposals came from Fremont County oftentimes to fund substance abuse. Now, we oppose the bills, but I support funding substance abuse issues, suicide prevention. And what I started researching was how when tribes did a compact and reciprocated the state excise tax, how you could fund substance abuse and suicide prevention efforts in this county. Money could go back to the states and the tribes could get it. The numbers that Mr. Noble did, because what I did is contacted the governor's office. The policy analyst, ironically, is now a statewide elected official. I won't mention her name, but it should be easy to narrow down. And we asked Mr. Noble to come up with these numbers. But if you go off the split, and this is just ballpark, the split that I originally thought of, where tribes would get 50%, local community 25%, and the state 25% as part of the excise tax, that would be $500,000 or so for the tribe, $250,000 or so for substance abuse efforts in Fremont County, which is about as much as the entire beer tax. And so it did what everybody wanted to do, but it didn't really increase anybody's taxes. It created tax parity. And that was part of the reason. Now, gave this concept to the governor with the white paper. He introduced it to the tribes. One of the things, those of you who don't know me well, I compensate for my shortcomings, like being funny looking and not being the sharpest knife in the drawer, by other things like being a hopeless optimist. And I figured we'd kick this idea out and everybody would just be puppy dogs and rainbows. But it just died. The good thing about this concept, ladies and gentlemen, is everybody wins. There's no losers. You can fund substance abuse. You can fund suicide prevention. You can help the tribes out. I don't necessarily agree with Senator Case's, and he's right. Lots of people will say the higher the price of cigarettes, fewer people smoke. I don't see that correlation, but if there is, that'd be a pretty good way to lower the smoking rate on the reservation. And so I grew up just outside the Pine Ridge Indian Reservation in South Dakota. And when in researching this, I found that there are 4 tribal entities all agreed to do this. And I thought, shoot, if Pine Ridge can do it, because it helps everybody. And so to finalize this, and I'll be happy to take any questions, we support Mr. Larson's proposal. I think it's a win-win for everybody, whether you're a retailer, whether you're a private citizen, whether you're in one of the tribes. And I'm really happy we're here. It's taken since 2011 to do it. I think my meeting with the governor was November of 2011. And it's taken 7 years almost, but I'm happy you're back on it, and I'll take any questions. Thank you.
Any questions from Mr. Mosier? Representative Conley.
Thank you, Mr. Chairman. I can't resist. Everybody wins. Won't everybody win even more if we raise the cigarette tax by $1 on a pack?
Mr. Mosier.
Mr. Chairman, Representative Connolly, to avoid going off of the weeds, I could go on this for a while, but no.
I like that brief response. Any other questions or comments from the committee for Mr. Mosier? None? Thank you, Mike.
Thank you.
Anybody else? Come on up. Welcome. Be sure to introduce yourself to the cameras.
Good morning. I'm Mike Bailey. I'm here from Riverton, and I've got some convenience stores in Fremont County, and we also have some up in Park County, up in Powell.
Yes, you do.
And I guess I would like the committee to just make sure that they keep in mind that, like Representative Furphy had mentioned earlier in your other subject, that we are competing with other states around us, and with the increase from 60 cents to $1.60, that would put us very uncompetitive with most of the surrounding states around us. And so again, we are going to see some changes, and I think there's going to be some people going from Wyoming to other states to purchase cigarettes, just like right now. I'll use, for example, up in my store in Powell, we have people from Montana that come down to Wyoming and buy cigarettes. And yes, that's a good thing for me right now. And if we were cheaper, and you know, if the people in Idaho have a cheaper rate, then the people from Jackson are going to go over to Idaho and buy cigarettes and come back. So the state does risk losing some revenue because they raised the tax too much. And again, I think if we could come to an agreement where we do have a level playing field, that eliminates a lot of the problems we have here in Fremont County. And I think a little higher tax would not be out of line. But I think if we get too much, we're going to put ourselves in an uncompetitive situation, and we're going to actually lose revenue. So everything you think you might gain, you might lose. So I guess just keep that in mind on the amount that you raise the tax.
Appreciate that.
Thank you.
Mike, any questions for Mr. Bailey? Thank you. Thank you for being here. Anybody else? Come on up. Yep. Welcome.
Mr. Chairman, members of the committee. It's Leslie Shakespeare. I'm a member of Eastern Shawnee Tribe. I'm also a Wyoming citizen. I am currently serving my second year of a 4-year term with the Eastern Shawnee Business Council. And on their behalf, I'd like to welcome you all to our area. Hope your stay here has been good and your meetings have been productive.
Thank you.
We get into this topic, I always look at what's the benefit. Is it mutually beneficial? I look at it as, from that standpoint, the money isn't everything. It's not everything for the tribes. We have issues of laundry list of issues that we face on a day-to-day basis. And though certainly money would certainly aid in addressing some of those issues, we also have to keep in mind that, as Senator Kay said, and when we start doing agreements and compacting, that we keep in mind that the government-to-government relationship between the state and the tribes is at the forefront. Because one of the things that we're charged with on the tribal end is protecting our tribal sovereignty, protecting our individual tribal members when it comes to these different issues. And so when we get to the issue of compacting, I think this is something that's different than just a simple agreement. It comes from two governments working together on a mutual issue with mutual benefits. And with that, I think it would behoove the legislature to look at codifying rules for a compact formulation between the tribes and the state. There's a lot of other issues, like there's gas and everything. So we need to look at how this is mutually beneficial and how this government-government relationship works when it comes to compacting. And when we're looking at benefits, particularly when it comes to taxation, it's always an interesting conversation because as tribal members see it, we get taxed on our oil and gas leaving the reservation, and in this instance, we get taxed on something coming onto the reservation. And a lot of our views within our tribes were like keep state taxes off the reservation, and that's been a hard and true line across the board because we can tax ourselves. We can tax, in this instance, we could tax tobacco on ourselves. We don't have to have an agreement with the state. So that just keep that in mind as you move forward with this legislation. But if you're looking at ways in compacting, you know, the compact should be, the introduction should be explicit and focus on tribal sovereignty as well as smoking prevention. And both the state and the tribes should look at earmarking tax proceeds for smoking prevention, cessation programs. That language should be at the forefront at the very beginning of any type of agreement that's done. I've done a little bit of research on this. I know other states have done stamping. I think there's maybe 14 or 15 states that have done so. I know that other states have done coupons, they've done quotas, they've looked at how to track tobacco sales and cigarette sales and address, as Senator Case said earlier, illicit cigarette dealings is when the taxation isn't equalized between reservation, off reservation, you have the illicit cigarette dealings. I know that's really prevalent in the East Coast, such as in New York State. And it's a possibility that could happen here as well. I mean, we want to get ahead of that. So if we want to address these issues, we really need to look at the compacting part of it, the taxation part of it, how the revenue is going to be shared. If we're really looking at a partnership and doing this and make sure everything's equal, there's a percentage right off the top for the entire statewide collection of this, not just what's sold on the reservation. I think is something that really needs to be looked at, because if we're looking at real partnerships and how we get along with things, then we can't just look at a narrow view of how these agreements have been set up in the past, because it hasn't been fair. I mean, it hasn't been fair. We just have to look at the severance tax that's collected. It comes off the reservation, our oil and gas. We get 10 to 13, sometimes $15 million taxed. That's money the tribes don't see at all, and sometimes we don't get the full benefit of that. I know we have other agreements with water, we have other agreements with our DFS programs and other services, but we're also citizens of the state. And so if you're taxing us and we're not getting that full benefit back of something that's coming from our reservation, that's not fair. And so we're moving forward with these negotiations and taxation. Make sure it's fair, make sure it's mutually beneficial. And if it's something that we can't come to agreement on that's fair as far as the revenue splitting, but perhaps the compact would just be that the tribes will excise their own tax on the reservation at the same rate as the state and keep the state tax totally off the reservation. That's another avenue, and I've seen that work in other states and other compacting. So I just wanted to keep my comments to that right now. I know we have Chairman Brown. I'm sure he'll address some of the same issues.
Well, thank you, Mr. Shakespeare. Appreciate you being here and offering that testimony. And comments, questions from the council, or from the committee? Senator Case, I'm sure you have something.
Mr. Chairman, I'd just like to thank Councilman Shakespeare for his thoughtful comments. I mean, I think there's room to move forward in those comments in a very big way. And I'm delighted. And I think what this committee's charge possibly is to do is to set up the language for a compact in the bill, maybe more generic than the 60 cents increase in tobacco tax or whatever is actually in the bill. But I'm very pleased and thank you. I look forward to hearing from other tribal representatives, including Chairman Brown, if you so wish. Thank you, Councilman Shakespeare.
Thank you. Thank you for being here. Welcome, Chairman Brown. Appreciate you being here as well. Any relation to Francis Brown?
Yes, that was my dad's uncle, my grandpa.
I worked 8 years with that good man.
Yeah, he was.
Appreciate him. Okay.
Good afternoon, Mr. Chairman and members of the committee. My name is Roy Brown. I'm the chairman of the Northern Arapaho Business Council for the 2016-2018 term. I'd like to offer some testimony that explains the stance of the Northern Arapaho tribe, specifically on as it relates to the tobacco tax. The Northern Arapaho tribe has, over the course of the past couple of decades, explored different ways of increasing revenue to benefit our tribal members. One of those ways happens to be taxation. Currently, we have a plethora of taxes, including a lodging tax on our Wind River Hotel, and that's something that has been beneficial to not only the tribe, but that has carried benefits to our tribal members. So taxation is something that we take very seriously. I think in the course of Indian law with relation to the United States governments and the local governments, there's been different eras, including termination, self-determination, and I think there are some arguments that gaming has been a new era. Our stance at this point is that taxation is the latest era of dealing with exerting our sovereignty within Indian lands, as well as dealing with the governments with whom we have a government-to-government relationship. So taxation is something that, as I said, we take very seriously. And it's something that we have had ongoing conversations about. And we applaud and recognize Senator Case's intent to include tribes in any discussion with respect to raising the state's tobacco tax. And so we appreciate those efforts. And when this first became an issue last year, that was something that we were appreciative in being able to be engaged in. Our conversations haven't stopped since that bill didn't proceed in the legislature. Our conversations still continued. And I think to us that signals that our view is that as a sovereign nation, as a sovereign entity, we have the ability and we have the right to tax our people in ways that benefit our people in the ways that the government sees fit. And so our stance that we want to communicate today is that we can recognize the benefits of raising a tobacco tax. We have read the studies, we have read the research that purports to show the benefits in communities where the tax on tobacco has been raised. And so we recognize that, and we acknowledge that those benefits might exist. And at the same time, we recognize that a government taxing its own citizens is something that the government should not take lightly. And so we're coupling those two viewpoints with our discussions. I think at the end of the day, our view is that it is our decision whether or not we raise a tobacco tax. And while we want to be engaged in dialogue with the state, I think, and however that might play within our relationship with the state, I think our viewpoint is that raising a tobacco tax on Northern Arapaho citizens is a Northern Arapaho Business Council decision. To that end, we do want to continue in dialogue. We are interested in exploring the tobacco tax. That is to say that we have been having discussions for years about ways to increase the tobacco tax that wouldn't have an undue burden on our citizens. And we also want to work in partnership with the state in order to provide those benefits, not only to the citizens of the Northern Arapaho tribe, but the residents of Fremont County and the residents of the state of Wyoming as well. So we're taking a little more hardline stance in that taxation is within our sovereign authority and it's our sovereign rights. But we also are wanting to make sure that the door is open to continue dialogue. If the state wants to continue pursuing a state tobacco tax, we want to be right in that discussion as a ways that we can have a plan of action that is mutually beneficial to us.
Appreciate those comments. Appreciate that testimony. Questions for Chairman Brown from the committee? Comments? Senator Ellis. Is it working?
There we go. Thank you, Mr. Chairman. I voted against the draft last year because of the legislation, because the effective date would have been contingent on an agreement being signed. And I think for our taxpaying community, we should be very transparent and clear, like that those taxing events should happen on a date certain. And so thinking about this process just a little bit, I mean, do you think it would make sense to pursue compact language before, and then the state legislature takes whatever action it decides with a date certain of when a tax goes into effect? I'm just trying to think of chicken or egg, cart before horse, choose your metaphor, but that's a hang up I have on this proposal.
Chairman Brown.
Mr. Chairman, I first of all, I choose chicken and egg. I'll choose that metaphor. But I think that's, I think a lot, for the Northern Arapaho tribe stance, I think negotiating or developing a compact or some type of agreement that recognizes our ability and our intent to raise taxes within, and then the state's ability and intent to raise taxes that might be similar or might be the same, might be the I don't know, the chicken or the egg, the thing that comes first, because I think that was some of the concerns that we had with the language of the bill, as well as I think the Northern Arapaho Tribe's perspective was it put undue pressure on us to pass a tobacco tax that we may not have agreed with. And I think given our intention of maintaining productive relationships with different entities and agencies within the states, it almost felt like we would have been at the end of the microscope would have been on us to pass this or deny this, and then we would have been, to use another metaphor, we would have had the I don't know what the metaphor is, but we'd had the bag in our hands.
Okay. Senator Case, I wonder if the committee, the tribal, you and Representative Larson serve on, could maybe assist us with this compact effort. I don't know what your agendas and what your...
Mr. Chairman, thank you. For the members of the committee and the people in the public, I serve as co-chairman along with Representative Larson of the Select Committee on Tribal Relations. It's a committee made up of 3 members from the Senate and 3 members from the House. It does not have the ability to sponsor legislation, and what we do is typically if there's legislation that comes out of the committee, the individual members carry it forward. But we have fairly extensive dialogues. We usually have two-day meetings a year. I believe we're scheduled for September for our first of the 2 meetings. It's a good forum, and we'd be happy to assist. I know that to be true. We brought this forward last year just to discuss the concept a little bit. Mr. Chairman, I don't know exactly how to proceed, but I just might throw out one possibility would be to have a separate bill, and very sensitive to Senator Ellis's comments and also Chairman Brown's comments about it feels too much like tit for tat, or you have to do this to do that. Maybe have a separate bill that authorizes the state of Wyoming, not the Department of Revenue, but the state of Wyoming, kick it up to the executive level to negotiate with the sovereign tribal governments a framework for tobacco taxation that would be leading to the equivalency of taxes throughout Wyoming. And that's just it. That would be enabling language. And the committee might think about whether they want that bill to require Senate approval of the compact or not. I'd suggest not. It's too cumbersome. Just make it between the executive branch and sovereign tribal governments, which are a blend of executive and legislative branches. And do that bill separate, and then take up cigarette taxes as a separate entity if the committee wishes. But let's get this enabling legislation moving forward that recognizes this possibility. And I think one thing we should also remember is the executive branch is not necessarily bound to wait for that bill. It strikes me that they could come forward, they could, on their own initiative, begin to develop a compact. I think that's within their purview, at least to start negotiating and not wait for the legislative session to begin to actually get started. Maybe by the time it gets to the legislative session, it's more of an approval of the compact or something, but I don't think we should really wait that long. We should start right away. That's my comments, and if the Select Committee on Tribal Relations can help further those comments and the wishes of the committee with this kind of a support for a bill, so be it.
I just made that suggestion, and the fact that you're here and in the locale, and it would be easier and more simple, I guess, to get your committee involved, your Select Committee involved in this effort to kind of push it along. Any other comments, suggestions from the committee? Mr. Co-Chairman.
Yeah, thank you, Mr. Co-Chair. I agree totally with Senator Case's concept of this. I think we're talking about 2 different things that you know, it's not bringing a bill like we had last year that's got, you know, new taxes in it, but we focus this bill on, you know, facilitating the development of a compact. And what we've got in mind and what we've been talking about today, I get from the witnesses, is basically where we talk about all the cigarettes being stamped, All right, so there's no difference in looking at a carton of cigarettes in one town in Wyoming versus another town that's in Fremont County. They're all going to be the same. The compact, the essence of the compact we have in mind is an equitable division between the customers that are tribal members versus the non-tribal members. So that would be one of the contents of the compact that we'd have to agree to, whether it's 80% or 70 or 90 or 100. You know, that's just something that we need to feel out with you to see where you are on that. The other thing is, I assume that this compact would have to have an equitable division between the two tribes. I don't know a lot about how you govern yourselves here, but I assume you have two separate jurisdictions that way. And I don't know if you do that by the number of enrolled members in each of the two tribes or how you do it, but that would have to be in the compact. And then whether or not you agree with those kind of things. I mean, do you agree that stamped cigarettes is a more mutually beneficial way for both you people and us to proceed on this, and that a compact would be a way to provide an equitable distribution between tribes and non-tribes, and also within the two tribes? Do we have room that Senator Case and others could negotiate this and come up with something tangible in a separate document? I assume it'd be a bill that we could carry forward and have ready for this upcoming session. That's my question.
Chairman Brown.
Mr. Chairman, with respect to stamping the cigarettes, I think the Northern Arapaho Tribe's viewpoint on that is we don't ever want the appearance of giving up our sovereign authority. That's a very big issue for us, and the method of stamping cigarettes, I think, lends to that perspective. And I think Mr. Bailey brought up the agreement we have with the fuel, and I think that's similar to the discussion that's the question that you're asking. And I think the fuel tax agreement has worked well, but it's based on sales, and for us, I think that one of the major concerns, it's just an estimate on how many tribal members that we taxed for fuel in that sense. So I think we want to be a little more accurate in terms of a tobacco tax moving forward. So something like stamping tax and having that distribution based on an estimated percentage isn't necessarily something that we are completely on board with at the moment.
Mr. Chairman.
Senators.
All these things are in the eye of the beholder. And I would suggest to our co-chairman, you don't really have to have the same stamp. You need an equivalency of taxes. So if the stamps are, if they say tribal authority on the stamp, and they're imposed on cigarettes sold on the reservation, and the stamp sold off the reservation have a stamp that asserts state authority, they could be as simple as different colors, or there could be different things about them, but they don't necessarily have to be the same stamp. And I think that's might be an angle that's respectful of sovereignty, and it still allows for revenue sharing and negotiation within the context of those stamps. But the most important thing is the equivalency of the tax rate, and we do that by agreement.
Agreed.
Is that possibly more of a, does that feel a little better? Possibly.
Chairman Brown.
Yes, I think that would, I think if there is an understanding that the tribe, or the Northern Arapaho Tribe specifically, is the one issuing the stamp, I think that would be respectful of our sovereign authority, wouldn't be sort of either giving up the perception or in actual, our sovereign taxation authority.
Representative Conley.
Mr. Chairman, being here and you and Mr. Shakespeare's kind of thoughtful comments. It just got me thinking, and I'm not sure at what time you came in, but we were just having a discussion about indexing of fees and taxes, and one of them was on cigarettes. And one of the things that occurred to me is that with this really assuring the maintenance of sovereignty, it might be that when we think about indexing, that we take cigarettes out. If we're going to be doing this bill and we're going to be doing another one, and we were talking about kind of indexing cigarette taxes, if we have a compact with you, there's no automatic raise because the compact would be $1 certain. That would be that exact equivalency that Senator Case was talking about. I think that's a possibility that might go into the discussion. So just thinking through the kinds of things that we all might put into that compact, I think is great to sit at the table and make sure that they're all there. So it's just a comment, Mr. Chair.
Okay, thank you. Any further comments or questions from the committee for Mr. Brown? Senator Case.
Mr. Chairman, in reaction to that last comment, I see what's essential in the compact is that cigarette taxes be equivalent. I don't see it as being essential that they be a particular dollar amount. That could come about through other law, but that the other law, if we're requiring this equivalency, then down the road, we'd have to all agree to increases and things like that. It requires 3 sovereigns to agree on it. But the compact is basically saying we all agree that it's in our best interest to have the taxes be the same. So I don't see it as being quite as linked as you suggested.
Mr. Chairman?
Representative Conley.
Mr. Chairman, and I agree with Senator Case, and I think that those are things to talk about. I'm curious whether or not equivalent means equal always, right? Or equivalent, right, based on taxes. I mean, all those things can be on the table, and honestly, I think it's exciting. It's an exciting conversation, and honestly, I think we can get the work done by the next session. That's my hope.
Okay, further comments or questions to the committee? Senator Ellis.
Thank you, Mr. Chairman. I won't be bashful in saying that the Supreme Court's decision that requires a vendor on tribal lands to sell cigarettes or selling cigarettes has to make the determination whether or not they're sending to an Indian or non-Indian. And I'm sure in the gasoline world, you don't always know who your customers are. I mean, it just creates this tension. So going forward, I would be really concerned if we held on to some of those concepts that the Supreme Court, brilliant minds, but in practicality, I think it's created a very difficult situation. I just would hate for us to continue to support that notion. Don't you agree, Chairman?
Chairman Brown.
Yes, thank you, Senator Ellis, and I think that brilliantly echoes my concerns of wanting to be more accurate when talking about tobacco tax.
Yeah, and I would echo that same feeling in the recognizing the fact that the state legislature certainly honors your sovereignty and recognizes that. This bill will go nowhere without this compact, this agreement. And to put even a timeline to it is somewhat risky in the fact that we don't want to hold that over your heads as tribes. I can assure you that this bill will go nowhere without some type of a compact or agreement among the sovereign tribes of the state of Wyoming. And so with that, and with Senator Ellis's comments, yeah, we're better than that here in Wyoming. And so we appreciate you being here and taking an active part in this discussion and giving us your thoughts, both Mr. Shakespeare and yourself, Mr. Brown. So we appreciate you being here. Any other comments from the committee? Questions? Okay. Thank you again. Anybody else? Then we'll close public testimony. Committee, what's your pleasure on this particular issue, on this effort? Senator Case.
Mr. Chairman, I would move that we have a bill draft developed that would respect the compact proposal and that it have certain elements and that the compact would be negotiated by the governor, the executive branch, and that, at least from our side, and that the designees from from the tribal governments, the Eastern Shoshone Business Council and the Northern Arapaho Business Council, that the compact have the goal of equalizing cigarette taxes throughout Wyoming. And that is essentially it. And that I think we should just stand on that. It doesn't have a drop dead time. It just provides a framework. So I'll throw it at that.
Motion been made and seconded. Just a question on my part, did that include your select committee to be involved in this development of the compact?
Mr. Chairman, we will take that up in parallel with you, using the same bill draft if you so wish. I think we'll discuss the same concept. I don't think you have to contingent on being approved by the select committee or whatever, but we will help. You have that commitment.
So it's motion been made and seconded. Further discussion on the motion? Ready to vote on the motion? All those in favor say aye. Aye. Opposed, no. Ayes have it. So any questions on that bill draft? If you have any questions, you can go to Senator Case.
We'll invite them to the.
Yeah.
We can invite them here too. Yeah, we do.
Okay. Looking for my agenda here. That concludes all the major subjects that we had to cover in this committee meeting, but would like to, I guess, bring it to a close by just kind of reviewing what the assignments that were made here in the last 2 days and the direction that we're going as a committee. I think that would be a wise thing to do, Mr. Co-Chairman. The first, as you turn your agendas over, the first thing we talked about was the motor vehicle excise taxes, and we had decided to carry that bill forward for the next meeting, gathering more information, input. The second thing we talked about after the break yesterday was reporting the personal property tax purposes. We had decided to form this subcommittee of myself, Representative Obermuller, Representative Conley, and Senator Ellis that will work on this particular proposal, coming forward with a bill talking about specific ideas like online registration, auditing procedures, and items like that. So I think there were a list of 4 or 5 items that we'll be working on with that, along with our LSO staff. The third item we talked about was the modeling. And I guess my question with that was, how do we share this information? How do we get this information out? We discussed it briefly. I don't think there was any set plan on how to do that with our SLIB board, with our business council, with Endow group, anybody that's involved with economic development. But I still think that this is a subject that this committee needs to think a little bit more on, and how to get this information out and share it with those groups. As I recall, I don't think we came up with any set plan. Am I wrong, or we just kind of left it up in the air? Mr. Co-Chair?
Mr. Co-Chairman, I think that we do have something out there as far as a continuation of this, and I had talked to our Remy guy a little bit earlier about this, and I think when he comes back, we're going to have a couple of more NAICS codes to look at. And then in addition to that, I think it's important that we don't just isolate that one topic within our priority one. Priority one also includes, as you recall, something we didn't talk about at all today, and that is there's a request out there to ask about what if we broaden the sales tax to include services, a lot of services, most services, and also removed exemptions. What kind of a drop in the overall state sales tax rate would make it a wash with regard to revenue. And I haven't talked to you about that yet, but, and the reason I haven't is because I knew it wasn't going to be on today's agenda. And, but that's one that will be on there. And I think that would be important to include in publicity, as well as this indexing, that indexing is, I think we ended up with some people thinking that indexing is a sneaky way to raise taxes. Well, it's not. It's an open, totally transparent way to keep taxes constant. And that needs to be part of this publicity thing. And I think by September, maybe we'll have a pretty good framework about, what this kind of brochure would look like if we went through, including, of course, the stuff on modeling, the fiscal model.
I think along those lines, Mr. Co-Chairman, I was going to be down in Cheyenne on the 19th and 20th and meet with Matt and talk a little bit about some of those outlines on that brochure idea. And again, public awareness. I mean, we need to involve the public in some of these issues and that will directly affect them. The other issue is the local taxing options. I think that we came away from that with the real estate transfer tax being dead as far as this committee is concerned. All other options on local taxing we'll continue to discuss and take up on our next meeting. The indexing, Co-Chairman Madden talked about that a little bit. And then, of course, the last issue we just talked about was the statewide stamping of cigarettes and the taxation of cigarettes and those things as it relates to the state and our reservation. So anything else for the good of the committee that needs to be brought up? Questions? Mr. Co-Chair? Nothing else? Our next meeting is scheduled for when? Sometime after the summer. September, I think it was in Buffalo.
Mm-hmm. It is.
We have the dates on that, Josh?
Buffalo, how did we get to Buffalo?
Everybody else wanted it there. Anyway, one thing we need to.
September 20th and 21st in Buffalo is our next meeting as a Revenue Committee.
Yep.
Mr. Chairman, we're trying to dovetail corporations on the 18th and 19th.
In same place?
No, you got too much going on. You got like 5 meetings there that week. So we're going to probably go somewhere in the basin and then, because I think there are 4 members on corporations that overlap with revenue.
Oh, okay.
So we're trying to coordinate with you.
Yeah, and maybe this has something to do with just what you said, but, we're getting a lot of topics. We got a lot of topics, I should say. And we got some more after the 19th of April. And as you know, by witnessing this last meeting, we've got a lot of things that's coming back to us. We haven't put anything away hardly today. So, we might need to request Management Council to grant us a couple of more days. And we have a variety of, a number of different directions we could go. We could have, maybe the November meeting could be a 3-day meeting and we just need 1 day. And maybe we could just have a 3-day meeting in September or maybe we could have another one in October. These kind of options that are things that the co-chairman and I have to work out kind of among ourselves, but we would like to have your opinion as to what you think would work best for you. And so those kind of questions, or answers, I should say, are welcome by both of us. So as we proceed towards the fall.
We'll keep that in mind, committee. What we're asking is if we do need and require extra days, what time of the year would be best for you and how you would have us fit that in. Representative Connolly.
Mr. Chairman, I was just going to mention.
We'll figure it out.
Yeah, we'll figure it out. We've got another.
Right.
That's a different meeting.
Right.
We'll get back with you.
Well, and what's causing this, committee members, we all know the story full and well is that we're not out of the woods yet with this revenue shortfall, and so this committee's taking the brunt of it, along with JAC and Investments Committee and others. So anyway, if extra work is necessary, we'll make that request to Management Council. Anything else, committee members, before we adjourn? Nothing. We did not too bad. Again, thank you PBS Wyoming for helping us live stream this meeting. I hope that the people at home were able to participate and listen in and be educated somewhat. That's the effort of this transparency effort. So we appreciate the efforts of Wyoming Public Television. So thank you, staff, for doing that. And if there's nothing else, we'll adjourn the meeting. Thank you.